Just the problem is here. This is the problem, nothing else. I've seen it, but I'm still keeping an eye on it. That was the 122 hit for that change in state of delivery, but because it was 930, couldn't do it. Let's see. I marked it as the inversion, if it holds or not. If it holds or not for 930, because I have so many sell side left. Okay, about buy side, yes, it has generated buy side as well, like around 9 o'clock or after 8:30 open, it has generated more buy side liquidity. But the issue is it didn't trade any of those fair value gap, and I saw that dealing range is forming from the 5 minutes chart. I will explain in a second, just waiting to see how the 930 works today, how the 930 looks today. Hey, hello sir, enjoy coffee. Ali, thank you, bro. I need it. I'm very tired. Like, I went out, as I said, like, I will be busy for next couple of days. I'm always busy, to be honest, but yeah, I mean, it's pretty important that I need something to deliver or provide me the energy. 930 is very nearby. I would love to see it's expanding lower, because now this high can be the market structure shift high, and that will be a problematic price action, because I have a lot of buy side left over there. This is the previous settlement price. I don't want to see market is going above that. Let me check actually how the CSD worked out. So 5 minutes CSD revisit happened. There is a very small fair value gap. Is it 930 yet? Not really, but let's see. It has cleared this sell side, traded back into that inverted fair value from 15 minutes. So if it's doing this way, then it will be a huge problem, because there is literally no bullish fair value gap formed yet. I mean, the whole scenario, there was only this small bullish fair value. Other than that, it was that inverted fair value where market was trading before. So far, I'm willing to see how this one is getting traded. If it's market is violating this one, then that is a problem. Now, too many lines. Let me remove some of it. I'll keep an eye on that one, especially above that area, because I have now a lot of buy side. Okay, like literally this is where market reached, where I have a no wick candle sitting right there. This is the buy side, then this is a buy side too, so it can go higher until this midpoint. Now this portion is the hourly bearish fair, like only hourly bearish fair value gaps unfilled portion. If it's willing to go there, it can go there as well. However, rather than the unfilled part of hourly, I would love to see how the 15 minutes on is working. And same thing, I would love to see, it's that 15 minutes and 5 minutes change in a state of delivery level revisit happened. No matter what, I don't really want to see the min threshold is getting violated, at least at the 930 open. After that, let's see what market can do. I want to check one thing, just do not do it. This is I cannot actually do it also, because there is nothing. I cannot do it as well because there is nothing. Wow, I wanted to utilize that one for that fall, but unfortunately, yes, like literally that level, but unfortunately by the time I could put it, it's already moving like crazy. It's already moving like crazy. What the hell is this? Come lower, because you have so many from the new day. No fair value, no entry. I'm just testing based on if there is a pre fair value gap or market has a pre what it calls previous fair value gap or something. Should not be putting there, to be honest. It should be around this area, like the midpoint. Oh yeah, bro. That one single candle. Is there any news? I don't think so. But if there is any news, then that is a it's just the 9:30 opening. So let's see how the market is doing. The reason I'm doing it this way is I'm looking forward to something. Like I saw a lot of things. I observed a lot of things. It's one of those, like before 9:30, if I took a entry, if that fair value holds or not, because a lot of time I have seen like it trades back into the pre created or pre-market fair value gaps, and from there it actually delivers towards the side we anticipate. So it's literally that entry. I don't know, like I have so much liquidity over here. Until this one, it's a very clean liquidity, especially until this fair value gap top. I will explain why this in a second. Let's see how the market is doing, because the real entry will form when the first presented fair value will appear. Until there is a first presented fair value, there is no entry. So let's see. Very priya बड़ा रे बेदर्दी I need the fair value. Come on. Turn it into the inversion. Exactly. Close below. You need to close below. Baby Priya. Holy volatility, man. This is called the volatility. I definitely don't want to see a bullish fair value forming before taking these liquidities at least, if not this liquidity, too clean to leave behind. But I'm not liking the way it's trading because it didn't create any fair value gap. By the way, it has given so much over there, like literally so much. 8:30 settlement price. Let me remove the settlement. There is a new day. This is the change in state of delivery or the order block candle. I would love to see it's turning this one into order block, that inversion or whatever it is. We have inversion here as well from the 1 minute chart. It has traded that. I have literally exact equal lows now over here, so I don't really want to see market is expanding higher, but for that I need to see it's breaking below this one from 15 minutes chart, because that's a 15 minutes bearish fair value. Oh my god, is there any news, guys, at 9:30? I didn't get enough time, like I just sit on the chart and I was looking for to like what market has done so far, so I need to know that. By the way, how much it offered over there? Nearly $400 for half a lot. Not bad. The bullish fair value is about to form and market should expand higher with that bullish fair value. Cause of that buy side, nothing else. Just because of that buy side, this buy side. Very priya, bada priya. One thing I didn't like is it left too much liquidity, so framing buy long can be a problematic thing for us. It has left too much of the sell side liquidity over there. Guys, this one delivered, okay? Don't think it didn't deliver. It gave more than what we are expecting in just 3 minutes, even less than that. But let me clear the chart a little, okay? We have so many levels over here, so I'll just clear this on. Nothing over here. 8:30. Not really sure if I need it or not, but let's see. I would love to. This is one buy side. This is another buy side. It's gonna take the upper buy side as well, but for that I need to wait until market can break that new week opening gap. Yo, what's up? So that fair value preempted empty or before 9:30 if I had an entry. I'm just looking forward to this low. I'm not quite sure like how NQ did over there below that low, like these lows. And let me check how ES did. Okay, ES has literally what it calls SMT divergence over there, so nothing to talk about. This is the buy side. If it can come back into this fair value, I would love to take this entry because that's that 9:30 entry, and especially at the level of midnight, I guess, not just from the top of the fair value. And if it continues like this way, then I have to wait until market can break that new week opening gap. Even better if it can break that unfilled portion of the fair value. So above the buy side, this is the unfilled portion. I would love to see market is breaking through that area and going for this breakaway gap. I don't know what that buy side is. Okay, let me remove this line because that's not the buy side. This is the all-time high. It's trading from a new like daily fair value gap. So literally market can continue. Unfortunate, man, unfortunate. I was willing, like literally this move, if it happened after taking any of these liquidities, I would be very confident to do take this entry even on my funded account, but I'm not super confident about it. Yes, the 15 minutes fair value that I was expecting to become IFVG or inversion fair value gap, that 1 minute broke, but 15 minutes it is a very long week over there. There is no like that's the only fair value for this entire move from this low until whatever high it has created. That's the only bullish fair value gap. There is no other bullish fair value. So that's that part. Another thing is, if you look into your 5-minute chart, this is how it looks. Okay, so it's creating that dealing range every time. It's creating a higher high, so it came very low, close to that one, but it didn't took that low. Instead it created another higher high and higher low. So it's this way. So after taking this buy side, if market is reversing from this area, I will be looking forward to the dealing range and that dealing range entry. But for that, again, I would love to see it's taking this high as well. If it doesn't take that high, that will be a problematic thing. So entry field, let's see if market is willing to hold or not. It's a low probability entry for me because the way it left the liquidity. Other than that, yeah, I mean, I would be confident. Remember, it has cleared this high. I think this is today's high. Yeah, no, it's the high of London. So it has cleared London's high by a tick or two. So this entry can be low probability. Careful about selecting your stop loss. Maybe this low is a better or a smaller size. However, this is the third candle, only one fair value, so third candle low. So I have taken 1.5 and I don't know like how far I should target with this one. I'll just put at that buy side liquidity, because if it's going higher, it's going for that buy side, it's that part. And let me mark the 930 fair value. This is overlapping with the new day. It has traded the new day opening gap high, so too many. Where is the 930? Here is the 930. I definitely don't want to see market is going below the fair value gap, because that will be problematic. It can easily now invert the fair value and continue lower for the sell side it has left, because of the London high is taken. However, I'm willing to see that it's taking the Asia high as well, not just the London high. I need the order block confirmation at this level, otherwise it will be problematic. Confirm on order block and do not break this fair value. That's the midnight level that it's trading, but anyway. By the way, did it deliver 25 handle? No, only 9 handle. So this is that exact 25 handle range where the liquidity is, the Asia high. Yeah, boy. 15 minutes, 2 minutes left. Let's see. Not looking good at all. It's now inverting that fair value gap for the sell side. I would love to see it's going through that one more time. Still the new day opening gap low is holding, but it's not looking good. So this 1 minute candle needs to at least close above the midpoint. If it fails to do so, it will go for the sell side liquidity. How long for the 15 minutes candle closer? 1 minute 20 seconds. Go for that midpoint, please. Now it inverted the fair value gap, and this is a change in state in 5 minutes also, if this candle can stay around this area. 44 seconds left. It needs to stay below that new day opening gap low, or that settlement, like below this area will be the change in state on 5 minutes as well. If it fails to do so, good, because I would love to see it taking the Asia high before the sell side delivery. And even better if it can close inside the new day opening gap, because that will be the 15 minutes not closing below new day opening gap. Okay, no change in state yet on the 5 minutes. Come on, go through that midpoint. I didn't like the 15 minutes candle closer, like the way it closed, it's a long wick on both side and a very small body on the middle. So yeah, I mean, it is what it is. Let's see. I'm willing to see how market is closing or trading that area. The fair value gap trade happened. It's rejecting from that fair value also, so I believe it is inverting that one. It is inverting that one. Asia high should be taken, why not? And if it leaves like this way, now I have relative equal highs to target later on. Maybe it is leaving it for the what it calls for tomorrow. Until it's stopping me out, let's see how the market is willing to go. As I said, because of that sell side, I'm not confident about my funded account, so I'm not gonna take the entry on that one. But let's see how it looks over here. SL. SL, Ravi. Still it's okay until it hits. I'm not willing to trail it anymore. It's like let it hit first, because still I have some reason over here. I have reason to see the market is reversing. It's that it's failing to trade the CE. That's a good signature. At the same time, if you want to see the similar thing happening from, where is it? I forgot. Was it from the hourly? Let me check. Oh, I believe the top. It's rejecting from CE over there. Oh, here. It's this one, like similar scenario. Some of the scenarios are similar, like it's rejecting before taking or trading the midpoint. This is the similar scenario from 15 minutes chart as well. So I'm willing to see how market is holding around that area, because since it has cleared the London buy side, it can have that reversal or reaction. But until the third candle low is traded, that fair value is still valid. I use it that way. So until it comes back and stops me out, it's still valid. Now I would love to see a candle actually closing above that midpoint. That will be a very good thing to see over here. If it fails now, this is the moment where market can come lower and stop me out. So for that, let's see where the market is trading and closing. And so far I didn't see any change in state of delivery or anything, nothing. So it's that part at the midpoint or just a tick above the midpoint. This is where I'm looking for the target. What I don't want to see, to be honest, is it's coming below that and closing below that again, because now can be a reason for market to go lower. if that happens, like it closes below the 930 one more time. And there is FOMC speaking, like member speaking at 10, so keep that in mind as well. By the way, now this low should be the stop loss because it has already created the order blocks or propulsion blocks. All I want to see is it's going higher, creating new fair value gaps, because it failed to give me the change in state yet. Okay, and 5 minutes chart here, this was the highest up close that has cleared this buy side and that buy side. Okay, so it failed to close below that, instead it started going higher. If you look the 930 candle from here, this is how it looks, and it failed to not really there, where is it? No, that's the one, right? 930, yeah. So the CE midpoint, it failed to trade that as well, so it's that part, and this is where the market is going. Stop loss again, like every time I say about it, it's let me do it in a different way. Like I'll take some partial over there, but somewhat around this area, forgot where was the stop loss, something like this. Didn't put the exact low, but something like that. I'm looking forward to this as well. Like let's see if it, because I believe it should go for that one this time once it takes that that buy side. This is this buy side taken one more time, but I believe it should take the Asia high and then the 15 minutes breakaway gap, maybe, if it can go through this unfilled portion. Let me just readjust the fair value gap, the unfilled sorry, the unfilled part of the fair value, like this, so that we all can see what level it has reached. 1 2 3, third candle. Kind of, but anyway. It came back below that 830 and then went higher again, and yeah, I believe it traded that high of that lowest down close candle that was trading into your 15 minutes fair value and cleared some liquidities. Traded there then. Anyway, doesn't matter. All I want to see that it's taking Asia high or high of the day, and then if it's willing to deliver lower, it is deliver lower. I would look for bullish setup if market has traded this level. It came very close to that, but it never traded that. That's the only problem I have. That's the only problem I have with today's price action. I really lost count of the zoom level. It's only one chart. I don't I'll remove it. You know what I'm pointing at, this level. This is a better level to again go higher, so let's see if that can happen or not. The reason I'm saying this is because it's overlapping with the new day opening gap low, bullish fair value gap, and that 930 of the first presented fair value gap. So it's a good level to expand higher once market reaches here, and the way it reached, that's a very good indication, because it didn't close below that level. even it respected the consequent encouragement of that fair value gap and then just traded the top of the fair value. So that's a good indication that it's willing to go higher. 12 seconds left for this candle's closer. I would love to see if it can close above this or not, because if it can close above this low can be my next stop loss or the trailing stop loss. So far it's failing from the high of the new week opening gap. That is a that's the part I am not liking, but I would love to see how the 15 minutes chart is doing. So let's see where the 15 minutes is. It has cleared this high, rejecting from this. Anyway, doesn't matter, should not be, it should go for that buy side. All I want to see, it's confirming that propulsion block by closing above that level. Even better if it can close above that midpoint, new week opening gap high. If that happens, the low can be the next stop loss or break even, like whatever. Yesterday I bought the Logitech G Pro Super Light. I'm loving this mouse. It was made with okay, so it has closed there. Even I believe this is where it should be, because the new week opening gap low rejection happened, midpoint yet to reject, but let's see. Like this is the move that should send for that buy side, and I'm willing to see unfilled fair value gap forming when it's going higher, so that market can literally what it calls continue higher for at least this mid level. I'm taking it here, but like a partial here, but there is a reason. Okay, like this fair value gap, according to my friend who like this, okay, like 25 handle or something is what he targets or looks for every time. Now the thing is, I really don't want to see it's coming for that mean threshold level. This is the mean, like it can come for the mean threshold, but I don't want to see it's closing below the mean threshold. So just a tick or two below that mean threshold is where my stop loss should be. Now is the time when market can go lower, and if it gives me this liquidity graph market structure shift and trades below this fair value, I'm gonna take the sell short. The 930 opening price, if it can go below that, I'm gonna take the sell short. This was the entry I could have taken, to be honest, like this entry on my funded account, but it's okay, like I have better opportunities towards the sell side than the buy side, since it has cleared the buy side. Asia session cleared. Okay, so this is where I'm willing to take a sell short the moment it breaks below this fair value gap. Even better if it can break below the midpoint of this fair value. So that one is done. Like literally I was just holding for a higher expectation if it is willing to go for that level or not, but the moment it closes below the midpoint of this fair value, I'm going to take the sell short. Let me check how the 15 seconds chart is looking. It's a foolish idea to look for that, but I'm willing to see like how one fair value, two fair value. So this should be the breakaway gap from 15 seconds. Again, until it breaks this fair value gap and the new week opening gap below, I'm not framing sell short, but I'm looking at that because 1 minute has a possible change in state over here, and it was that part that I'm looking into. This is the mean threshold, that is the retest of that change in state. So let me put the breakaway gap back from the 15 seconds, and let's see if market fills it up or if it leaves as a breakaway gap and continues lower. It has taken this liquidity, but unfortunately it didn't create any bearish fair value gap to mark it as a liquidity grab market structure shift. So Are you getting it? Like without a fair value gap, there is no market structure shift. Now from 15-second chart, I saw some fair value gaps, but the time frame I'm looking at, I need the fair value from that time frame to mark that market structure shift. For example, if I take this entry from the change in state of 1 minute, which is literally this level, I have to put the stop loss here, which is a small stop loss, and then target whatever, like 1 to 2, or since I have a lot of sell side liquidity, I can do it that way. But the only problem is it's still respecting that first presented fair value gap. At the same time, it still is inside the new week opening gap. I'm waiting to see, or I'm willing to see if it is breaking that new week opening gap and that first presented fair value gap or not. Better with proper structures. How is the 15 minutes looking right now? Okay, no bullish fair value, that's a good sign, but at the same time I would love to get a 5 minutes change in state with 1 minute bearish fair values. Now let me see, could you show how you draw the buy side liquidity green rectangle? This one, it's just the 15 minutes bearish fair value. It was a huge fair value gap, so I just marked the unfilled portion of it. Like, since this is the buy side or high of the day until New York open, this was the London Asia high, this was the London high. So Asia high, London high, it took the London high, gave a deeper retracement, then went higher and took the Asia high. And that's why I always mark the next level of, like, both of the levels, this buy side and this buy side, because when it took this buy side, it created relative equal highs over here, and this is a better high to target. When market will continue lower, we can utilize that high. It's that part, nothing else. So it's leaving it as a bag. I'm waiting to see a bearish fair value to form, especially market to close below this first presented fair value. If it can close below that, I will be targeting at least until this fair value gaps high, if not this level. So let's wait and see, like, if market is giving me that or not. Close below that midpoint, please. Not at the level of midpoint, below. Okay, it didn't close below, it closed above. So let's see. That 15 seconds fair value, it has delivered beautifully. But anyway, like, this change in state I'm not taking, because again, it has reasons to go higher on more time. Like, it has higher time frame point of interest over there. So although it has delivered more than 1 to 2, but again, like, change in state level, fair order block candle high is your stop loss and target 1 to 2. That way it has delivered. But this is the moment of time when I'm willing to take the entry. I was willing to take the entry from literally here. Unfortunately, the candle closed a tick above, then opened at the level of the midpoint of that new week opening gap. First presented fair value gap. So if that candle could close here, this is the candle where I would take the entry. Keep the fair value overlapping with this one, midpoint. So this is where I'm going to take 15 lots of sell short. Stop loss will cover the breakaway gap only, just the high of that breakaway gap, maybe a tick above the breakaway, but not more than that, just that part. Will you give the entry, or you will go straight for the sell side, then retrace back into the range, then give me the entry? What? By the way, this is your breaker range, okay? Like this. So I put it around that midpoint and that new week opening gap low. It can go for that level as well, no problem with that, but as I said, like I'm taking it from the obvious levels, and the stop loss will be also at the obvious level. This is the breaker that it's trading, but let's see like if it can go for my entry level or not. The unfilled portion of the fair value is very important. That's why I keep marking the unfilled portion, nothing else. Oh no, oh no, oh no, 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 no. We're not going to get the entry before it can at least clear these equal lows. The reason behind that is it has already rejected, and I was looking forward to this is a immediate rebalance. So it's going for the sell side straight away, and this is that fair value that will turn into a IFVG, or I was expecting IFVG around this level. Let's see. By the way, if I got the entry, the target could have been like, let's say I got my entry over here, a stop loss was maybe a tick or two above the breakaway gap, but not too far, like not that area or the high of that area, like this way. And target was until this far as minimum, like this is my minimum target for this entry. The reason behind that is laying on the 15 minutes chart. So let me go for the 15 minutes chart and I will show you. See this one candle closed through the fair value gap, the very next candle closed above, next candle traded the upper portion, went higher. So this is that fake breakout. Now if you have a fake breakout over here, you are expecting market to respect maybe the upper portion, or it can come even the lower portion as well, no problem with that. But this scenario should not repeat over here. If it repeats, then this one is broken, like this fair value, it's broken, it's that part. Okay, so if I got the entry, I know there are liquidities right at this level, and this can act as a order block, but still I'm willing to hold until this far. It's that. And yeah, I know how the dealing range works. So if market continues like this way on the 5 minutes, okay, like this is right here, okay, this high, this is a lower high and lower low. From there it has created a higher high, higher low, higher high, higher low, like this way. Okay, so it continued like that. So one single move will take the sell side, then it will create the dealing range, retrace back into the range, continue lower again for the sell side that it has created. It's that part. So I'm willing to see how that is happening over there. Let me check how the 1 minute structure is looking. It has cleared this sell side, and failed so far. Okay, so still I have opportunity. Let's see. Still I have opportunity. That sell side is taken, this one is taken, but it didn't took this one, didn't take this one, and it has created now more relative equal lows over here. On the other hand, I have relative equal lows sitting here. Literally there is nothing over here that except for this fair value. So if it's broken from 15 minutes, these are the targets. Like even this low is the target, because there is nothing over here that should send or hold price. It's the breaker range again that's showing some reaction or rejection. Now is the time to see where is the OTZ. Since this is 0.5, I'm back to that level. No, I'll add over there, but I'll hold it for new week opening gap low and same stop loss. The only level I'm afraid of is this midpoint. I'll show you some examples if I remember correctly where I saw it. But yeah, So that is the entry. This is the stop loss, because I, no matter what, I didn't want to see market is going for that level and filling up that fair value gap, because if it goes there, it's inverting this fair value gap. That's the one I really don't want to see. The midpoint is traded. It can trade that fair value, but that one should remain as a breakaway gap. It has traded that fair value. It should remain as a breakaway gap. If market is willing to go lower, that's what I want to see from the chart or from the candles. Now I don't want to push it higher, okay? Like if it stops me there, I'm more than happy to go with that part. And again, it closed above that midpoint. This is a no-go. So let's see how far it's going after taking that liquidity. So that one didn't work. It has cleared the liquidity, went higher again. Still, it has left more liquidities over here. So I would love to see it clearing that buy side again, trading at least the midpoint, then falling. And this is that failed area, right? So overlapping. It's okay. Not framing too many. Not framing too many. This move just took my profit and gave me a $20 loss. Haha. But how is that actually? Because it was not 25 handle worth of a stop loss, was it? I took it from, or maybe it was more than that. No, it was actually something like 18 or 19 handle. So how come this profit is gone and also $20 loss? How? Because the entry I took was from the midnight level, and profit I took was a little above this. This was 28, almost 28 handles. So how come 18 handle worth of a stop loss took my 28 handle worth of take profit? Don't know. I don't know. Now that's rubbish. If it closes below this midpoint, then that will be a rubbish thing to happen. OTZ. I'm missing my 5 minutes and 15 minutes chart, to be honest. So upper portion rejection, middle portion rejection. So again, go higher for the low of that new week opening gap. Too many levels. I don't know like which one. So traded below that no week candle. That's okay. That's completely rubbish because it didn't took the second candle's high that I was not willing to put my stop loss. It didn't took that on. Now it's coming lower again. What's, oh okay, so 10-14 FOMC member is speaking today, right? What is the 10? This was the 10. And also the meeting starts a little after, so let me actually see. Okay, I got it now. Just a sec, guys. I have to check one of my crypto wallet. There's supposed to be some transactions happening over there. So what is the total it? Not yet. Okay, haven't received it yet. Here. Come back to that level. midnight. Let me remove that 15 seconds bag. MSS is still valid until that high is taken, but I would love to see it's now going for that level, then rejecting. Especially the same way, like this one. It respected this fair value. Body failed to close below. A long week traded all the possible area. The same thing I'm willing to see from this one as well for a lower continuation. Okay, my go milk cows traders are white and in the sweet. Francis, what is it? Go milk cows? Are you talking to me or anyone else? Hello bro, you traded London SB today? It was a good one. No, I told all of you yesterday that I will be very busy, so no London silver bullet trade today for me. No London silver bullet trade today for me, cause I told, yeah. You reading it now. I said you didn't put a stop loss and I asked. Oh, okay. Oh, the issue is, sorry, my chat appears as stop chats instead of live chats, so I have missed a lot of them. Winston Look, could you show how you drew that buy side liquidity green? Okay, I have said that. Gupta, hello bro, you traded SB? No, not really. What's that thing about 6 to 7:30 nowadays? Yeah, not nowadays. It's literally, that's the scenario for a long time, that 6 to 7:30 there will be a low, there will be a high. So it's that low and high. So it was hard for market to keep this as a breakaway gap, and it's very easy for market to keep this as a breakaway gap. How about that? FOMC, it's the FOMC effect. It's the FOMC effect. Let me check what time they actually started. FOMC effect started. Future hit my long short. Okay, that's where is their meeting? Oh, so the live, they don't do live if there is no press conference. I didn't know that. By the way, I just saw something. Let me check if I saw it right or not. Yes, how come? Is he back again? Is he back again? I'm too eager to press from this area, but anyway, let's see. Let market do its job by a little. Like literally press from here and the stop loss. That's equal high. Let me do it actually. Thinking about this one. There is no wick, so not aiming for a bigger one. Just think this is that fair value gap candles entry. It's still respecting it, right? The bullish one, not really. It's gonna turn that into, like, not that one, the upper one is already into a inversion fair value, and it also didn't keep it as a breakaway gap. It filled it up. So time now for this sell side liquidity and the other liquidity. Come on FOMC, show the power. I don't know what you're talking about, because there is no way to see it, but let's see. Show the power for either this level or this level. I'm more than happy to see what the power for the market is, because after creating this type of liquidity, why it's finding it too hard. It didn't find it hard here. It's not hard, bro. It's not hard. Ah, missed it. Thought if it can go here, I'll add 5 more so that the average can go higher. Anyway, doesn't matter. Let's see. Sell side. Only sell side is what I'm looking forward. Only sell side is what I'm looking forward. By the way, I think this entry is from the fair value. I was trying to take it from the fair value, not below the fair value, but it's market execution. So that little I can give to the market as well. So for 2 entries, 1 win, 1 loss, another one is on its way. I didn't expect it to fill that fair value gap that way because of this new week opening gap, because of this 930 fair value, because of this bearish fair value and the new day opening gap. A lot of reason was there, so I was not expecting market to at least feel that, but I forgot about that. I didn't see it's already that 10 where I had the FOMC news. Maybe they started 5-10 minutes after the FOMC, but whatever it is, like I forgot about that one. If I remembered it, I would wait for it just a little more, maybe 15 minutes more. Here. If that is what you are willing to do. By the way, I'll add 5 more around this area. It's not because I want to add, it's because the entry is looking awkward to me. Like I'm not feeling good looking at the entry below fair value gap, the one I was looking forward to. Trusting the process, whatever it has given. Let me check. 58. Yeah, nearly 60-65 and a lot of move out there. Okay, again I'm expecting the fair value gaps to form. It's taking too long to do that, so let me check the 15 minutes structure, how it's looking. That same bloody thing. How about the 5 minutes? Oh, okay, now I know the reason of my stop loss on the first entry that I took. The change in state candle. The change in state candle revisit. That was that area. So the breakaway gap was literally above that change in state candle. But anyway, there is no very good, like there is no good structure happening in the market right now. It's literally the 15 minutes and the 5 minutes are literally rubbish. Like this. No fair value, nothing. Long wicks on the candles on upper side, on lower side. It's literally that rubbish happening on the market. And it's some clear clear direction, clear indication. Clear direction and clear indication. So this is the moment of truth. What's the time? 5 minutes more after that. 5 more minutes at 10:30. If it can expand lower with new fair value gaps, that's the one I'm willing to see. Like that's the structural leg I'm willing to see a breakaway gap and bearish fair value gap for me. High rejection, mid rejection. Let's see. Until it closes above this midpoint one more time, I'm safe. But the moment the body closes above this midpoint, this high will be taken again. At least that's the least. Like at least that high will be taken, if not all this. Because there is no structure. Just look like 15 minutes how it looks like this. Okay, so stop out it is. Even this high, that high, these will be taken, all of them. Closing above mid is a indication that it's going for the highs, the buy sides. No weak candle, it should go there as well. And there is that no weak candle as well. Mostly look at that price action. Okay, so trend line liquidity or whatever it is, you're seeing it that way. The bodies, no fair value gaps, nothing. I think there is some, yeah, this one. It's more like this way. It's more like this way from the 15 minutes. Don't worry, that high will be taken, this high will be taken. So better if it can go for that breakaway gap and then give us the sell side delivery. Or at least the midpoint of that unfilled portion. I think it's still the effect of FOMC. Let me check the Forex Factory how it's looking, because there might be a little bit of idea about how the FOMC members are talking about. What the FOMC members are talking about. So 10 a.m. there was a FOMC member speaks. Barkin spoke at 10:15 as well. Okay, what the hell is happening on 10:15? This was 10:15 when he started. Okay, so this candle's opening was when the other guy started talking. I mean, the whole day there is someone. Tentative loan for Sunday survey. There was another one, I forgot which one was that. There was another one around Fed inflation expectation. So they are expecting higher inflations. They're expecting higher inflations. How come? Not a good condition to trade on your funded account at least. This is the 9:30 opening. Okay, like this 15 minutes candle, this is your 9:30 opening. From here, this is how it looks. So no, it's not a good condition to look for setups or framing setups. Let market create the dealing range, then you can look for it. It has cleared this equal, failed to go for that. How come? Not happy yet. Not happy yet. Bullshit. At 2 p.m. there is also another FOMC member. At 5 p.m. another FOMC member. And 2 p.m. we have a loan offer survey. I don't know how good is that one. Let's see what the 10 a.m. FOMC member said. Thank you for inviting me to speak here today. The clearinghouse is a great page to talk about the evaluation of that. Highs will be cleared, especially this high and this area. Market will trade back into at least here. I'm expecting it to go for this mid level, which is 264.75. Look at that 15 minutes, how beautiful it is. It is beautiful. Lots of fair value gaps, lots of clean respects of levels. Bearish fair value traded, respected with one candle, very next candle, boom. Bullish fair value created, one single candle, boom. Bearish fair value created, respected. Yes, in this case it has cleared these lows, so whatever it is, it's definitely not anyone's target when you have exact equal lows sitting right here. So again, boom. It's a very good market condition to trade and to frame a lot of setups. Okay, what I missed the whole time, right after that 9:30 opening, it cleared some sell side, so went above, cleared buy side, created short-term low, went higher, took the buy side, took the short-term low and some other lows, created relative equal lows, went higher, came lower, created short-term low, cleared short-term low, went higher, cleared. Okay, so clear, seek and destroy is happening. So stay out of the market until market can actually break the cycle of seek and destroy. The next, if anything happens, I will be looking forward to that 10:50 to 11:10, that one. If this window fails to break this structure, then there is nothing to continue. It's that part. Let's read some comment and let's see. Alex, say bro, how are you? Just notice you are live. Have you taken any trades? I have taken one trade using the 9:30 fair value, targeted that buy side liquidity. That one was like in live stream. It's that part. Narcissist, how are you, brother? I'm good. I'm seeing you after a while now. Where have you been and how are you doing, bro? Yeah. If this is a monkey dance that you have sent, this is what market is doing actually, the monkey dance. It's taking sell side, it's taking buy side, generating liquidities on both sides, literally. Hey Sulojan bro, I was looking for you because I loved the way you are going through every single video and letting me know by a comment that you have watched this one. Yeah, I was dead for a while now. What happened, bro? Is everything alright? Is everything alright with your life? Okay. Dead from the chart. Dead for the chart, not for the people, right? So, no worries. And Sulajan, how is your process going? Like so far, what have you found valuable? What was? Oh, okay. Yeah, love. Thank you. Yeah. Okay. Good to hear that you're good because I haven't seen you in last couple of, I think, days or weeks. So good to see you back. Good to see you back. Tahir Mustafa, hi bro. Hi brother. I was just about to read it as hi bro, then I saw hi bro. uh, yeah, it's not about hard, it's about like it's literally creating that. It's in a SD, okay, SD profile. This is a pure SD profile. It's seek and destroy. It's taking some sell side, going above, taking buy side, especially the 15-minute candle. If you look at that, like, took some sell side liquidity, now took the previous candle's high, which is that high, created fair value gaps. It's not giving any damn to any fair value gap. It's literally trading between that 9:30, the new week, the new day. These are the levels it's trading. So yeah, I mean, I should not be framing any setup. All I'm willing or waiting to see like how this macro delivers. Macro is mostly to take liquidity, so I'm willing to see how the macro, which direction the macro is delivering. Okay, so London silver bullet today, I believe it was a buy side delivery. So if I'm not wrong, cause I saw the 8 p.m. where is it? 8 p.m. That's the high. It didn't clear the high, so it cleared the low during the silver bullet, which should be something around. This is 5, so not here. This is 314. So if you have framed anything from here, then this is where you had the buy side delivery that has given you the profit if you took the buy. Outlander, hey bro, how are you? What happened to T2? I saw T2 is streaming. Like, I was looking for if there is any FMC live streaming going on or not, but I saw like avoid today, bro. If you are trading, please. I don't know. Like, I'm suggesting you all to avoid today. Even I'm not taking entries on my funded account today because I'm seeing the seek and destroy. It's taking a high, coming for a low. It's that high is taken already. Okay, so this high is taken, it should go for that level as well because no weak candle, and the 15 seconds structure has delivered beautifully. This was that 15 seconds structure. Let me move it here. So from after taking the Asia high and trading into the unfilled portion of the fair value gap, from 15 minutes chart, this was how it was looking like. Literally the breakaway gap remained as a breakaway gap, fair value gap was there, it can fill it up completely, no problem with that. So this part, the change in state, the only reason I didn't frame anything or I didn't take the entry, even though I went for that 15 seconds fair value and marked it over here, if you guys remember, was because of that new week opening gap and that 9:30. Now to this short term high, it's coming for those short term lows. What a bloody joke it is. Bro, can you explain seek and destroy? Yeah, I'm explaining it over and over again. Like, it's just look from this 15 seconds chart, okay? Like, it will be even clearer to you. Took some short term high, took some short term low, created new short term high, came below, took the lows over there, but didn't take the other low that has created exact equal lows over here. Like, I'm saying exact because it's looking like this sell side. Retrace back higher. It was supposed to keep the last fair value gap as a breakaway gap because it had so many valid reasons for that. 9:30 or the first presented fair value was there. new week opening gap low was there, then I had more fair value gaps from 1 minute chart, more overlapping fair value gaps, new day opening gap, a lot of other things. So it was not supposed to go until that far. It went there, no problem. Came back, created new fair value gaps and a short term low. Retraced back, took the short term low, went higher above this, retracement, again went higher, came back, took that low, not that low actually. Which one? Oh, sorry, the high. It has taken high, came back, created another short term low, equal lows over there, went higher, took that high, came back, short term high, equal lows, went higher, took these short term highs, came back. Now it's clearing that short term lows. 1 minute chart, it's looking like this. Low taken, relative equal highs created. Market retraced back into the range, came lower, traded fair value gap, respected it, came lower, took the low, went higher, took the high, came lower, created fair value gaps, disrespected it. Like any PDRS is holding now, like except for that new week opening gap. Any fair value gap, any order block, anything is holding the price. Like literally it's taking some lows, it's taking some highs. Overall, from the 15-minute chart, you will see how it looks. This is how it looks. Like this. How cool is that? Now look at that strength, look at that huge fair value gap forming inside of that area. Let me move it to the side so that you guys can see the fair value gaps clearly. So many levels. Let me actually remove it. It looks very bad, like literally too many of them. New day, new week. I had to remove some of those, but I cannot actually. I need it. It's not overlapping. If it was overlapping, I would remove it. And it's not very small either. It's I think 7-8 handle worth of new day, so I cannot even remove that one yet. And it's today's new day opening gap. Pure seek and destroy, better to avoid. Yeah, exactly. Watching your all videos one by one, and also I'm taking notes and keep practicing. Amazing, bro, amazing. As long as it's helping, yeah, you can do that. But if it's not helping, then I think anyone, like for anyone, stop wasting your time on my videos or any content that I have uploaded, because doesn't necessarily the way I see the market, you all will be seeing the market the same way. Joe, we are not friends? How come? On Discord. How come we are not friends, Sijo? Oh, okay. Instead of sending it to... What happened actually? Just a second, guys. I saw some messages from... What the hell? No reply at uber.com. So, scam. Okay. Payment submitted. Following transfer has been submitted. Held up to 24 hours. Are you freaking kidding me? Why? Finally. Maybe it's breaking. Finally, maybe it's breaking. But unfortunately, no entry. Finally, maybe it's breaking. Again, it rejected from that midpoint. Now, think this way, like if you are utilizing this new day opening gap, this two down up close candle, this is where your stop loss should be. It should not go back for that level on more time. It has already respected fair value, cleared liquidity, so this should act as your propulsion block, and you should expect a volatile move towards the sell side liquidity if market is still not inside of that seek and destroy profile. So far I'm not seeing it broke it properly, like there is no fair value gap forming on the 15 minutes, or there is literally it's still within the range of that whole price action. Better wait, fair value gap, let the market create fair value gaps, and then you can utilize the dealing range. Like it's literally the dealing range, it's creating dealing range this way, like low high, higher low, higher high, higher low, higher high, higher low, higher high. This on was a higher low, but take this as your inducement liquidity. Like market took this on, but it didn't take the other one, it created more liquidity. So in case this type of scenario is present, just count this as your higher high, expect another higher low to form. If no higher low is forming, another higher high to form. If no higher high is forming, the only thing you are expecting is market should continue lower and clear all these liquidities to form the dealing range first, and it will give you the fair value gaps in the dealing range, like overlapping with the dealing range midpoint. Or just look at this sheet again, it has cleared some liquidity going higher for that high. It should not clear that high if it's continuing lower. It's inside of that same seek and destroy. Short term high is being created, short term low is getting out, then the short term high is getting out. It's doing it that way. It still didn't trade above that candle high. I'm just willing to see how it's going for that level, if it can. So yeah, like wait until market clear all the sell side. This is the type 2 dealing range that I have anticipated, or I'm talking from the beginning, that I'm willing to see it's taking the sell side, then retracing back into the range, especially the premium discount areas. Then it's continuing lower again for the rest of the sell side, because this is where market should reach. Even better if it can reach for this level, but at least the high of that fair value should be traded, which is below that low. The daily is sitting above that 4 hours fair value, so it's not necessarily market must have to go there before it can create a new all-time high. But let's see like how it is going higher. It has traded the daily fair value already. So when the higher time frame is sitting above, that will be your first priority. This is how the market looking today so far, and that was the fair value it has traded. This was that 4 hours fair value gap level. I forgot what I marked with this one earlier. What are these? I don't know. I don't remember actually what I marked over there, so leave it. Let me check how the 1 minute is taking buy sides and sell sides. Amazing. I think like after this macro, if it fails to give us the direction, I'll stop the stream, because there is no point of wasting time and giving up on the sleep in a condition like this. In a condition like this, you know what it's gonna do? The way I'm thinking, let's see. Like I don't know if the high will be taken or not, but this low will be taken. That's what I'm thinking right now. Don't take this entry. This is just to see the way market is working, if it is that way or not. It's literally because it has cleared some short-term high. I'm not sure about this high will be taken or not, but why I'm doing it is because it's time for market to clear some short-term lows. So maybe this low will be the low, but since it's relative equal lows, I'm seeing like, let's see if it's that part of the market or not. This is not a entry, okay? And I already said it why I took it, or why I pressed the button, just to see the macro. If it's continuing with that seek and destroy profile, let me actually put it below just this low, because I want to see like short term high is cleared, now a short term low should be cleared. So if this is that short term low or not. Yeah, like I had a busy day. I was super tired, but at the same time, since I promised I will be on the stream, so yeah, I mean it's that part. But I was super like I'm super tired. One of my uh close brother, like not brother from my mother or something, like brother means I came to know him from Australia after coming here. We worked in the same place for a long time. He's from the same country I'm from. His son is very sick. He has a like 2.5 years old son who is very sick. So uh, what a shit. Yeah, I mean he had to admit his son to a hospital. Mm, yeah, I went to see him. This sort of thing. So after my busy day, when I was supposed to get back home and trade the London session, that was the time I went for his place. It's too far from my area, nearly like 1 hour drive, and 1 hour to return as well, and then spend some time over there as well. So like his for last few months I've been hearing like his kid is getting sick every now and then, and I was saying like please mm, go for a medical checkup, like whatever it is required to get the actual idea about what exactly is happening with him. And they went for a checkup, and today morning the doctor said like bring him to the hospital and admit him. So it was a bad thing to see, and yeah, I mean that guy is pretty close to me, so I had to go there. I had to go there. That low will be taken too because it's relative equal lows, but again just seek and destroy, short term high taken, the low it created, I'm just looking at that low, not any extension or anything. It's not a entry, it's nothing. I'm not talking about the TP if it hits or a stop loss if it hits. It's just to see or show you like how this seek and destroy profile works. Short term high taken, short term low taken, again created a short term high inside of a fair value gap, went ahead, took that liquidity, now coming for the low, it was retracing from. It's literally that part. That's what I'm trying to show you guys. I don't care if this is the move that goes for the sell side or not, but whatever it is, it's literally still holding that seek and destroy. Is there any way to remove these dotted lines as the TP and stop loss or entry lines or something? It's that part. Okay. If it can continue, then we can see the break of the dealing range. Break of the seek and destroy. If it fails to continue, then what you will see is it will come very close to this low, create new relative equal lows, and go for that buy side one more time. It's or create new short-term low, short-term high, take that. It's literally that shit happening in the market. So no point of framing any setup, no point of taking any entries. As I said, like since this is the low and this low is very close, it will take both of them. It took both of them. Now we can look at that. So avoid it, guys, avoid it. You don't have to trade every day. And maybe the PM session might have better price action. Even sometimes in this type of situation, the lunch hour gives better price action. This a boom. This is not a boom, bro. This is literally just a experimental press. I pressed it because I know what the next move will be, like the seek and destroy profile. That's why I pressed it. It's not a setup or it's not a entry that I framed. But I would love to, like, it's inside the macro, so I would love to see some liquidities has been taken or grabbed. So it has cleared buy side, that's why I aim for the sell side, nothing else. It's not a entry, it's not a setup, nothing. A small boom. Master, congratulations. When my second kid born only 6 months and super premature. Now all okay. Oh, thanks God that it's now he or she is doing good now. Cause yeah, I mean 6 months is too early, right? It's literally too early. But yeah, like if everything is okay, then good. I think premature babies may get some like cold issues or something. I'm not sure. Like when it's cold outside, you have to take better care of them, something like that. Clear it, clear it, clear it. Give us some fair value gaps from where we can frame the setup. Don't create another relative equal low with this one, or even with this one, the other sell side over here. This is a pure sell side like this one, but I don't want to see like it's leaving again relative equal lows and going higher. Did you took any entry in London session today? Must Rider? No, bro. As I said, like I was outside the whole day, so no, no London session trade today. No trade today for me. Like literally no trade today for me. I was not even thinking about this stream, but unfortunately, yeah, like not unfortunately, actually, fortunately, the tiredness I had after taking a little rest, it was I was feeling good enough to come for the stream. It's that part. Again, unbelievable. Avoid it, guys, avoid it. It's literally, it's finding it too hard to take the liquidities. Okay, it's what I said. After taking this liquidity, it is doing exactly that. Yeah, I mean, I'm just waiting just this until this 11:10 and want to see how market is doing during that move. Let me check how the 15-minute chart is looking right now. Finally, is it closing below that fair value gap? The only 15 minutes fair value of entire move from this low until that high, whatever it has created, or even from this low until that high. Let's see. Oh, come on, not this way. Maybe the youngest in the stream. Must write are serious? Serious, bro? I'm the youngest to stream in YouTube history, okay? I'm only 9 years old. How about that? In the history of YouTube, I'm the youngest to stream. Man, trust me, when I When my colleagues came to know like I'm nearly 34 years old, and they said like, are you serious? I had to literally show them my photo ID where I have the date of birth over there, and they're like, oh my god, you're lucky. You don't need to worry about your marriage or anything, because no one can guess your age. Whatever you will tell to them or say to them, they will believe in that. Let me remove these lines. That's the macro window. That's why I moved that line. What a freaking joke. What a freaking joke is happening in the market. This is 1101 or 1102 candle. So let's see how the market is willing to continue lower. I'm willing to see at least it's coming for this fair value gap high before it can go higher, because this is the fair value from 15 minutes. Okay, it was broken over here, the very next candle closed above, then the next candle traded back into the midpoint and went higher. So I would love to see it's coming for the high again. If it breaks that, this is a good area to look for sell short until this level, literally utilizing that fair value, because that fake can happen only once, not multiple times. This is that only fair value, and a candle's body closed below that, but similar scenario can be seen over here as well. Like close below, very next candle is expanding higher. I would love to see it's leaving a smaller fair value gap over here and coming below that fair value one more time. It still have 13 minutes, so let's not assume anything. Let's just wait to see how market is doing it the same way it did before. It's this 15 minutes fair value, this one, after making that low yesterday, low of the day yesterday. So it's that one. It broke once, went higher, closed, traded back into it, then continued higher like this way for that buy side delivery. It's the exact same scenario happening over here. And there you go, no fair value gap from the 15 minutes. Again, that shitty price action is happening. Oh, by the way, there is a reason. I believe the reason behind that is not just the FOMC. Tomorrow is CPI. So after the CPI, it will use the, like whatever it is doing, it's literally from a higher time frame, like higher than 15 minutes, since it's a bigger range. Maybe 1 hour or 4 hour, you will be seeing like something like this. Okay, sideways price action, like literally that accumulation. I would love to see the manipulation happening lower using the CPI, or before CPI it's aiming for the lower run, trading back into this 4 hours fair value at least, if not the 15 minutes breakaway gap sitting around this area, which is here inside of that 4 hours fair value, right, this one. So that can be the manipulation, then the distribution higher again for a new all-time high. However, let me actually check one thing. Still it's that consolidation runs the buy side of the curve. Now too big of a week over here, that's a problematic zone, but still I would love to see. I would love to. It's too big of a week over there, so no alignment, no alignment. Let's see if I utilize this range to that range and this low to that high. How is that looking? 433.5, so 434.75 or something. 435, let's say. That's the, that can be a good level to look for the next week's high of the week. That should be a better level. Just by 2 days AM session and Asia London, those sort of thing. The reason I'm not going for this low is it's too long of a week, and literally if you see here, it failed. It came very close to that midpoint and failed to trade that area. Like the CE of that week is traded like this way. So mostly the liquidities are like, you are treating it as you treat your fair value gaps midpoint. So it's that part, it's literally rejecting from the upper quadrant. Let me check the lower one. I hope it's overlapping with that 15 minutes. Where is my projection? Okay, now it's showing. I hope it's selecting the correct one. Not really. So let me remove it and select the other one. Why is it not projecting lower yet? Hmm. $21,000. Let me check from a higher time frame. Like, what do I have at that 21,000? Maybe 4 hours. I mean, I'll put it over here, but I won't be surprised if market reaches this level and goes higher. So I'll put both of the projections, the accumulation and the manipulation, the manipulation and the distribution phase. Both of the projection will be there to see where market is retracing from. How about this area on daily? How it looks? Oh, it doesn't show because I don't have it on for the daily. Daily. Yeah, not bad actually. The area is not looking that bad. I'll lock it up over here. Because it's like, this is literally the third fair value, or the highest level of the fair value. So it traded the upper quadrant, it can easily trade the lower quadrant. I believe it will overlap with 75% of that fair value by looking with my eyes, but let's see. Somewhat. So from a 4 hours chart or daily chart, I would love to see it's coming below that C as a week, trading close to that projected terminus and closing above that midpoint of the fair value gap when market will come that way. Remember, I have a breakaway gap here, I have a fair value gap here, but I'm not expecting this fair value to be traded at least this week because of how the weekly candles look. Okay, so if it trades back into that range, there will be no weekly bullish fair value gap, and I don't believe market will do it when Bitcoin is doing 90,000. Crypto is going crazy. Crypto market is going crazy. I'm keeping an eye, but yeah, I mean, I'm not investing at the moment because it's already too high. NYC AM session scalp. I want to study IT but have financial problems, so I want to earn from trading so that I could pay my own fees. That's a which is 3k USD a year. It's not a huge target, my brother. It's literally, if you have that sort of intention or motivation behind learning, I believe you will find your success that you're looking for. Because you need to have something in your mind. If you just target for that small amount, it's too easy. You can do it in a single day as well, but I don't suggest it. Whatever it is, I don't suggest it, but yeah, I mean, It's too easy. It's too easy. And when you have a figure or a amount in your mind, that actually helps you a lot to determine, like, okay, I have got the profit I was looking for the day or for the trade that I took. Yeah, so it was that 15 minutes that way, but unfortunately no fair value gap, nothing yet. It's doing the same thing. Long wicks, small bodies, or comparing to the wicks. Okay, like small bodies mean comparing to the wick. The moment 9:30 opened like this, should have understood, but anyway, like it is already. I have been talking about that seek and destroy for a while now, so it didn't took me too long to get the idea what market is doing. 9:30 candle looks like this. When was the last time a 9:30 candle looked like that? A 15 minutes 9:30 candle. This was the 9:30 from yesterday. Last week's 9:30. Let's see, something around. This is 9:45. This is 9:30. It was looking okay. So the Friday AM session 9:30. Okay, this was that candle, and right after that, what it started to do? Take some sell side, take the buy side. Like literally, if I go to this level, where is it? Where is it? Right here. It's the exact same scenario you're seeing. Short term low taken and a low created. Short term high taken, low taken. Short term high taken, created a short term low, went above short term high, took that short term low, again created short term high, took that, came below that short term low. Literally the exact same scenario from Friday and today. It's the exact same scenario because the candle is looking same. 9:30. Okay, the huge wick on the top, and this is the body. Only Monday it was good, so Monday delivered pretty good like this. Okay, so it delivered that good, and this is how it looks on today's 9:30. So maybe this is something you guys can observe going forward. Okay, literally, like the day 9:30 will have long wicks and small bodies like this. Just observe a little bit, like how it's taking a low and then creating high, going for that high, that sort of scenario. So you will have clear indication of a seek and destroy mode right after that 9:30 15 minutes candle close. If you are in a entry or trade, you know where to target or how to save yourself from getting stopped out from that trade, if it's the scenario going forward. So from now on, observe a 9:30 candle like this, or a 9:30 candle, forgot where was it, here, like this candle, because it was the exact from 15 minutes I can see it. Like I was not saying it that way, but look at this: previous candle's high, previous candle's low, previous candle's low, then this candle's high, again this candle's low and that candle's low, then both of those highs over here, then again came below that candle's low, then that candle's high, came below that candle's low, then this candle's high, and whatever the nearest one created. It's literally that scenario went for the whole day. Okay, so it's that exact scene you are seeing over here. I don't know, like when was the other seek and destroy? I remember there were some more, but what days or what date I don't remember. So going forward, you keep that in mind. Like when a 15 minutes 9:30 candle is like this, just observe it, so that if it's the, like, if the result is coming out the same way you are seeing today, or you have seen today on Friday AM session, this sort of thing, then going forward you keep that in mind. Like when you saw a 9:30 candle something like this, you avoid that session, or at least if you are in a trade, try to aim for the nearest level, so that once it's taken, you are out of the trade and you got your profit. It's the SD. Okay, so that sell side is taken, but yet I'm not happy to see market is going higher from this sell side, at least here. And the way it took it, not a single bearish fair value, not a single bullish fair value. So yeah, I mean, doesn't make any sense to look for any setup over here. Suppose there is no FVG below, price took Asia low, when and where would you entry in this situation? Okay, let me actually see what I have known everything you have taught, but the problem is about execution. I just know where to execute, but like it is the mindset. So price took Asia low, when and where would you enter in this situation? Okay, I got it what you're asking. Yeah, like CSD, using CSD. So I will look for the CSD, but with proper confirmation from the time frames the way I explained. I will take the entry. If it stops me out, I will wait for another CSD to happen towards the liquidity I'm aiming, or I aimed at the first entry. With the first entry, I won't change the side, I will wait. And if you're talking about like when that scenario will come, for example, now I have bullish PDRS, I have bearish PDRS. I have a bearish 15 minutes fair value gap. This is the unfilled portion of the fair value, because as you know, this is the buy side liquidity from Asia session. So since it filled up until this far, the unfilled portion is what I want to see market either respecting or breaking through or going through. So it's that part. And about the unfilled portion, I have been talking about it for a very long time, but in 2024 ICT has cleared it very very thoroughly. Like literally he has mentioned literally the unfilled portion of the fair value, how to use that portion. Whatever it is, like unfilled portion, it's literally that is where you still have imbalance. So either you want to see that imbalanced area is getting rebalanced or revisited and respected, then market going towards the direction the fair value is indicating. For example, this is a bearish fair value, so you are looking forward that looking towards that bearish delivery or direction. If it's breaking through that, you are utilizing the same way you will utilize any other fair value when it gets inverted, just that portion. You want to see that unfilled portion's midpoint is getting respected after like breaking and revisiting that area. It's exactly the same way. When and most of the time you will find your PDRS. The only moment when you will not find it is when market will be at all-time high. The best part of scenario or best case of scenario is when it will be again at all-time high. You will have only bullish PDRS to aim for buy long setup. So even if your silver bullet is giving you maybe let's say a sell short setup or a entry that is going for a buy like bullish PDRS retracement, you can take the entry using the CSD or using any other model or method that you are using. However, do not aim any further than the nearest higher time frame point of interest or nearest liquidity. Even better, just 1 to 2. Because if you do that, when market is at all-time high, ICT has said throughout his entire journey or entire like 700 videos, whenever there was a all-time high formed or created, ICT has said that you will be only looking for buy longs. I have now like bearish PDRs sitting over here and here. That's why I can utilize it to look for sell side delivery for a certain level. For what? For example, this low came this close to that fair value, it didn't trade at it, but I already know it's trading a daily fair value gap. So if it even leaves it this way and continues higher for a new all-time high, I won't be surprised. Because daily mic is glitching, cutting out. Somehow the internet is glitching again. All at a sudden from 10,000 kbps it went for a 4,600 500 kbps. Why this cola very D, mate? I haven't done anything to my internet. Why it's doing this? Have you got the thing, like the thing that I was saying? Let me know if it's better now or not. Let me actually write it down since the mic is glitching. Where is the PD arrays? Anything? Nothing. Fork. No, bro, your speaker is glitching. Everything is okay. Oh. Okay. So yeah, what I was saying is, you target low, like any sell side that you are targeting, target the nearest liquidity. Okay, and use wait until it reach for a higher time frame point of interest, maybe 15 minutes fair value gap, break a gap, that's that sort of thing. And from there you start to look for buy long setups again. For example, today it has taken Asia's sell side, then it should deliver for the buy side of the curve, like it should go for towards the buy side delivery. So this is overlapping with the overall market condition, or it's aligning with the overall market condition. This is where you are framing your like high probability setups, or where you can take a little bit more risk when that was happening. The risk, by little bit more, I'm actually talking about the risk you are fearless to lose. Like, I don't know, you are willing to lose every trade you think this way, that it will not affect me if I lose this entry, or if this entry hits my stop loss. So far, like even on the stream, whatever entries I'm taking, am I putting like $1,000, $2,000 worth of a stop loss? No. What I'm expecting, I'm putting based on that. I'm not taking too many lots. I'm not taking 5 NQs or 10 NQs. I'm using micro NQ. So if I take 10 micro, it's only equivalent to 1 NQ. 15 is equivalent to 1.5 NQ. So I'm using it that way. I'm not taking too big of a risk that I'm afraid to lose, or that is literally hard to recover. There is nothing called recovering, because whatever you lose, you lose it. You lose it forever, especially when it's about the money. Because think this way, like you have $1,000 in your bank account, you lost $200. Now you gained $200, your balance could have been $1,200. Instead it came back to $1,000. It's still a $200 loss. So what you lose, there is no way you recover. That's why try to forget it. Whatever the days are, whatever happened in the market, you just try to forget it. You don't keep thinking about that loss. This is the mindset. The day you will get this mindset, that is the day you will start to see the real gain, because that's important. You cannot be thinking about what happened already, about the past. For example, I saw that change in state and confirmed it from the 5-second chart. I marked that 15 seconds breakaway gap. Like literally, this was the highest up close candle trading into the higher time frame point of interest. I had this sell side marked the whole time, even before the stream started. I confirmed the breakaway gap. Market left it as a breakaway gap, but I didn't took the entry because of the area it was at during that moment. However, when market was trading here, when it stopped me out over there, I could easily cover. Every time I take an entry, I say cover the breakaway gap candle side, the candle that created it. But this is where I was confident. Like confident means literally I was not seeing any reason for market to come here. Only because it's second destroy, it had to come here. Yeah, that's the only reason I'm seeing it. The reason behind that is I had fair value gap here, I had breaker blocks over here, I had 930 first presented fair value here, I had a new week opening gap low here, then it had to go there. Like so many levels to break before it could reach there. I had even inversion fair value gap overlapping here as well, like literally here, this one. But what market did, it had to do that part, before it could go for that sell side delivery. Okay, so Am I bragging regarding that entry? That okay, if I only put it there, it was safe on this leg. Eventually it went above that candle's high as well. It had to leave it as a breakaway gap. I had so many important levels: a new day opening gap, a fair value gap, breaker blocks, inversion fair value gap, first presented fair value, new week opening gap low. I don't really need to cover higher. I should, like, only thing I was looking is, or I was thinking when I framed that setup, or when I wanted to put that stop loss, is if market can come for this level, it can go for that new week opening gap low. So first, when I was framing, or I was about to take the entry, I was saying I will just cover the breakaway gap high. Then when I saw right at that breakaway gap upper portion, I have that new week opening gap low, I just put it a tick or two above that breakaway gap, just here, not there. Eventually what happened, just think this way, okay, my stop loss was around this area where I got stopped out with this leg, and I was targeting until at least this fair value gap, or taking partial at 1 to 2, then whatever it is, like maybe these liquidities or these liquidities, taking some partial but holding until this far. After partial, maybe a stop loss at break even. But the thing is, if I put it there, how much from where I put my stop loss, I don't know, like I'm just randomly selecting. I know it was not too far up there, so just selecting a tick or two above that area. This 6.25 handle, eventually what market did, if I put it there before it could deliver my 1 to 2 or even any partials, it has went higher, stopped me out with 6.25 handles more as my loss, which is even with one lot, it's more than $105. Just with one lot, it's extra $105 that I'm paying the market because I'm putting it there. I'm not seeing any reason to put there. I have so many level of defenses already when market came this area and it was retracing. So many level of defenses. So I don't really need to put here or even here. Yes, this is the third candle's high. There is no wick over there. So who knew it will fall from that area? The midpoint was where market respecting, and it took that liquidity, then fall. The whole time it was a seek and destroy. High taken, low taken, created short-term high, short-term low, short-term high taken, short-term low taken. This is how market was trading. So wherever it is, it doesn't make any sense to put any higher than that. And this is how you are saving yourself from bigger losses. Accept the loss, and at the same time accept that you have to take some partial. Don't worry about, oh, if I hold the trade for a little longer, or oh, if I put it on the third candle side, then that entry could have delivered more than 70-80 handles worth of profit. Okay, maybe $1,600-$2,000 worth of profit, something like this. 58 handle, yeah. Only if I put it on that. It's because you are seeing it already. It's because it's in front of you that it didn't reach for that level. You don't know when market was trading this area. You don't know if it was that scenario or not. Anyway, doesn't matter. But the thing is, whatever you do, remember, do not risk more than you are happy to lose. Like whatever you are happy to lose, just risk that part. And you will be happy. Like literally, you will not worry about that past. You will not worry about what loss I took or what happened. Doesn't matter. You can take 10 losses in a row and then still get back and become a profitable trader by the end of the week or month, whatever it is. If you just properly manage the risk. Give yourself enough chance. Okay, like while trading, give yourself enough chance. It's that part. It's more about the chances you are giving yourself rather than how much you are making every day. For example, why I said at the very beginning, like literally at 9:30 open, that market created equal lows. If that bullish fair value was forming after clearing the lows, I would love to use that, but because it's leaving it this way, I'm not happy with that move. So what I did, I literally ignored my funded accounts to take any entry. Now I have already made more than literally 4,000 $200 or something in Friday and Monday. Friday it was 1150 or something, and Monday it was 900 something. I forgot exact amount. So each account, like, you know, I'm copying it in another funded account as well. So it's like each account I'm making over 2000 US dollars in 2 days. I don't really need to trade in a condition like this. When I'm confident, that is when I will be trading. For example, if there is no new day opening gap and this 930 fair value sitting right above my change in state of delivery, I would never miss this one. Like literally, this is, you know, even before market, with this one single candle, I went back to the 15-second chart and marked that breakaway gap, and it left that breakaway gap as a breakaway gap. After taking the Asia, when it took the London high, right, I think at this level, or where is that London? It's a 15-second chart, so it should be here. London high, okay? When this leg took the London high, market gave a deeper retracement. Wasn't I saying it should take the Asia high before it can go for the sell side? Like literally, when this retracement was happening, in 1 minute it will look better. So when after taking Asia high from this level, this is Asia, London high. After taking London high, when market was giving this retracement, wasn't I saying that I had that entry, right? Remember, I had that buy long entry until that far, because it doesn't make sense. Okay, this is relative equal highs over here. There is unfilled portion of the fair value where market should go before it can fall. So anyway, it's more of a experience. You will get it when you get it, like when you will be doing it for a while. This high took the liquidity by a very small move. I don't care about that, because ICT has cleared it so many times, or said it so many times, that just one tick is what it takes. And you also know, if you have a stop loss, it doesn't even require one tick to go above or beyond that level. If it touches that level, that is where your entry is closed, or you got the stop loss hit. So it's literally one tick is what it takes. But the issue over here is, it came this close to the high of the new week opening gap. It didn't trade that. That was the issue. You see bullish from here. From where? From here? No, I'm not looking bullish from here, because it's not a valid area for the market to do that. I'm seeing more of a continuation of that bloody seek and destroy. It's creating liquidities. There is no higher time frame point of interest created during this whole run. Even barely you can see 1 minute fair value gaps, like literally barely you can see. So whatever this market is doing, it's not a healthy condition on the market to frame setups or trades. 5 minutes, 15 minutes, hourly, nothing has a fair value gap when it is going higher. Nothing has a fair value gap when it is coming lower. So not a healthy condition. More like the way I'm seeing it is more about the accumulation phase. I don't know how the PM session will be closing, but I would love to see its closing going lower and at least trading back into this area, like this area, 4 hours fair value gap. If it can trade back here, then by today's PM session, I'm already getting my manipulation phase. And from tomorrow, using CPI, market can continue higher. So for that, I don't care about whatever happens today. I would love to see where market closes, and from tomorrow, I'll try to look for setups again. It's that part. Like again, I will show you like what I think. Katy Pen, I think you joined little late or something. 1 hour chart, you will understand. See this? This is that accumulation happening. So if market can go below these lows and trade into this area, this is a 4 hours fair value, higher than the time frame I'm framing it or looking for it. So if it continues lower, I'm happy until this far. I don't want to see it's going too far below that level, because that will cause another conflict, which is on the weekly chart there will be no bullish fair value gaps. On the daily I have so many, on the weekly I have got a change in state of delivery and confirmed by what? Like literally change in state of delivery confirmed by what? Multiple daily fair value gaps. So if market is willing to revisit that change in state of delivery, that can only be the reason to not create a fair value gap over here. Other than that, I'm not seeing any reason for market not to create a fair value gap. After a big expansion like this, I'm not expecting a big down close candle from the weekly chart. That barely happened, barely, like literally barely happened. Expansion continuation, like it's literally continuing. After creating multiple fair values, then it retraced. All the highs taken, everything. Again, big candle is still at least that green candle which created a new high over here, then it retraced back into fair value. Again, big expansion. You're seeing at this body as black, but I'm seeing it, this was the previous day closing, or this was the opening of the previous week closing, and this is the opening. How far market went? Nearly 400 handles above before it can turn into a black. So still the buy side was delivered, still the previous week's high was taken, and whatever the daily structure was looking during that days, it was that part. After that, see, like big bearish week. What is the next? What is the next? It's that part. It's literally that. You might be thinking, okay, this is also a big one, then why it's green? Look again. How much on the sell side it has delivered? Nearly another 400. Literally that. Oh, it's more than 1000. 1045. After that week's opening, it first delivered more than 1045 handle before it could turn as green. So when you had that opportunity, you, like literally it has cleared this sell side as well. Like look at this. Okay, the swing low it created, it has cleared that low before turning green. So when it's cleared the liquidity and then it rejected like this way, where is the problems with that? As long as it made the liquidity, I'm seeing that bearishness first before it could turn green. How a candle works for a down close candle, okay, it opens in a level, creates the high or goes higher first, creates the high, then goes lower, then comes back and creates the like closes around the area where it creates the body. So this is a down close candle. This is how a down close candle forms. The same way market creates a up close candle like this way, opens, creates the low, goes higher, creates the high, then comes back into the range, and then this is how it forms. Let me show you from the PO3 mode if I have it here. Okay, bars here, right here. See this? Open, high, low, close. Open, high, low, close. These are the red candles. These are the down close candles. I don't know if you guys are able to see this canvas. There is no option to make it. What is it? Oh, it's the last price level. So anyway, so there is no option to make it any thicker, but see that this is how the candles are formed. This upper move for a down close candle, when it opens the first move, this is that manipulation, then the distribution, then market retrace backs into the range and closes over there. It's literally that. Open for any candle, even in 1 minute candle, what you see every time, or even in a 1 minute candle, opens. If it's up close candle, it will create a wick on the lower portion within first couple of seconds, then it will go higher to a certain level, and then it will come back at the last couple of seconds where it will create the upper wick, which is your retracement like this. Open, manipulation happened, or the low of the candle formed, went higher, high of the candle formed, and then last couple of seconds or minutes or whatever, like depending on what time frame you're seeing, it will create it will give you that retracement and close around that area. It's that part. So I hope you're getting the point. So yeah, I mean, if market goes for the other fair values level instead of reversing or going higher from here, then that will be because of, okay, boom, like it literally reached for that fair value, that the one I was talking about for today's price action, that it will go for at least the high of that fair value, because fake can happen only once. It should go for at least that level, and then if it's willing to go higher for some liquidities, it can do that. But unfortunately, it didn't create any bearish PDRS to continue again lower run. There is literally nothing on the 15-minute chart, if I'm not wrong. Like, I haven't seen it for a while now. Yeah, so there is literally nothing except for the wicks. So continue this way towards the downside. I will be very happy to see that. Literally, when market will deliver the buy side of the curve, it will be took that sell. Okay, amazing. If you have taken it, I'm sure you got a very good profit or something. Or if you're asking me, no, I didn't take it, but when I started the stream, that's what I was explaining, why I'm expecting market to reach there. It's because that's the only PDRA that is still valid until proven wrong. For example, if it closes from the 15 minutes chart one more time below this by a tick, that's it. This fair values job is done. Like, it's now broken for sure. Here it was broken, but the very next candle closed above. So this break was a fake breakout. Market traded back into it, went higher. The same thing was happening right around this area, but what happened? Went higher, revisited, I don't know what it revisited, because I don't have any PDRs over here. This candle revisited new week or new week or new day, but after this close, it just created that manipulation leg, and then eventually it closed below and turned that into an inversion. If I had to take an entry, maybe this was the entry, like this secondary visit, I don't know, wherever it was. So maybe this was the entry. But anyway, like, can it reverse from this 15 minutes order block, or is still bearish? This one, I don't think it should, because this order block's job was done when the high of the day or the London high, Asia high has cleared. Why I'm saying this is because you see that change in state happening over here. Look where the market came and retraced, like exactly where it came and retraced. And then what happened? The bullish move, that high taken. So liquidity, whatever, like, look here. Do you have any other liquidity here except for that all-time high? Like, literally the whole thing you are seeing over here. Is there any other liquidity except for that all-time high? To go there, it has to break this unfilled portion of the fair value, or just keep it this way, okay? It has to break this fair value and that fair value before it can reach there. So this was the area where you are looking for your possible target as your buy side if you are bullish, and this is the area from where you are looking for the sell side delivery if you are bearish. So only buy side it was taken with this one. So this order block's job is already done with that leg. I don't care about if you are seeing little reaction. It's because there was some liquidity over there. You are not seeing it because it's trading order block X level, Y level. No, it's trading this fair value gap, because it was fake, like broken or fake breakout happened once. When it's coming back, just check this type of scenarios on your chart, you will understand what I'm saying. Like, if you can find it on your chart from few other levels, I forgot, but I had a lot of example like that. But anyway, wherever it is, if you can find it, you will understand what I'm saying over here. Fake for anything, for order block, for like order block mean threshold, or for fair value gaps, anything, it can happen only once. It should not repeat. If it repeats, it's not a fake. If that makes any sense. Okay, so it cannot repeat, it's that part. And about the order block, after the change in state, market traded back into that exact level before it delivered for the buy side. So it doesn't really require to respect any level of this. I'm just looking how this 15 minutes fair value is getting respected or disrespected, like if it creates the same scenario or not. That's why after that liquidity grab, I was looking forward to that high of that fair value. I can already see that it's literally going for a lower run for this level. But let's see, like let's not assume, let's wait to see how the 15 minutes candle can close. What it has done so far is, I believe it has created again 1 minute exact equal lows over here. Yeah, so 1 minute exact equal lows. What are you expecting, market to leave it this way? Exact equal lows. It should break, okay, like overall it should break. The reason behind that is it has done its job. When the fake happened, even like forget about that order block or whatever it is, forget about the change in state, simple thing this way, when the fake happened, one candle closed below, the very next candle closed above, the very next candle, this candle traded back into the same fair value, then sent price higher above those buy side liquidity, from where it was retracing back into that fair value. What did I said about your target? If a fair value is getting respected, then the high it is retracing from, that will be the first target for you. It's that high, it's that high that market took. You don't have to mark it as your Asia, London, or near KM, near PM. And if you don't use the session based liquidity, don't do it, but it's that part. Fake breakout below that, went above, retested the fair value, continued higher, for the high it was retracing from. It's literally that simple. Once that part is done, this fair value was previously fully filled, or it was broken also as a fake breakout. This time I'm not expecting, if market can close literally below that midpoint, I'm seeing it's going for at least this 4 hours fair value, if not that breakaway gap. I'm already seeing it going there, but just let's not assume unless it breaks it one more time, okay, like until it breaks it one more time. So let me say, hi, do you have a bag in 1 minute? Today I have nothing. I mean, if you're talking about this one, I don't really want to talk about today's price action. It's look at the whole area on 15 minutes, look at the whole area on 5 minutes. Just a 1 minute fair value is not good enough to consider anything. Like look at this, all this price action, even look at this, all this price action. Bullish fair value formed, broken, went higher. Do you know what it respected? There was I think 1 tick or 2 tick worth of bullish fair value right at this level. I remember this because I was looking at it from my phone. This one, because there was a 15 minutes change in state happening during this moment, like above this level, if I'm not wrong. Here, let me mark it so that I can see if, yeah, so see, they're like literally those levels. So that fair value gap, that is where market came back and then expanded higher above these highs. Some of those highs, not all of them, but some of those. But whatever it is, it delivered for, if you're targeting 1 to 2 or something like that, a smaller targets, yeah, it has delivered that. It's that 1 minute price action like this way. But yeah, I mean, as I said, and how you can avoid the fake moves towards the upside, even if it's too volatile or too aggressive, is by this, okay? When it created that exact equal low, what did I say? Like it's not going higher yet, man. It's coming for that low, so it's that low. Similarly here, right after taking that London buy side, this was one buy side, and I had another buy side sitting here that market has cleared later, after a big retracement during 9:30. Now why I was confident that it should take that buy side is literally this: it took it by a tick. As ICT said, one tick is what it takes. However, see that new week opening gap high, when market failed to reject from the low, failed to reject from the mid. I'm not seeing it's failing from a random area. I would love to see if it's failing from the high of it. See that, like 1 minute closed above, back inside the, like back below that new week opening gap low. It came and one single candle closed below the new week opening gap low. The very next candle rejected from where? High of that new week opening gap. Then again came closed below. Where is the rejection? Mid of that. The entry I took based on this scenario, or so based on this scenario, it traded that midpoint. I was expecting if it can reject from here. Okay, I was wrong. Let's see. Again market went and rejected from midpoint. This is where, no matter what, I would love to see, like if it was not a seek and destroy profile, you would see, like after rejecting from high, how I'm framing it. Again, look, closed below, fake breakout. Again, remember, fake in 1 minute. 15 minutes it's even more clear. It never literally closed above that new week opening gap, but I'm just showing you from 1 minute chart so that you can understand how 1 minute will looking like, or 1 minute should be looking like, comparing to your 15 minutes chart. High rejection, midpoint rejection, low rejection, fake. One single candle came, closed below the same fair value gap. New week opening gap is also a fair value. Look at this. Okay, look at this. Closed below as fake. One single candle went through that fair value and closed above again. The very next candle, midpoint rejection. Now this is where again you are seeing that rejection. Fake. Okay, fake can happen only once. Now is a time where you can maybe look for your buy side delivery if you are expecting any buy side of the curve. I'm not expecting it, that's why I'm leaving it. Now there is no higher time frame point of interest, so nothing wrong to expect it to the nearest level. Now look at your bag. If market can close above that, or I don't know if it has already closed above it or not. This is the only bearish fair value of this entire leg, so it should be your inversion fair value that has cleared the sell side liquidities, not just from this as well, and coming out of a higher time frame point of interest. By the way, too many levels, let me remove some of them. 9:30, done. Anyway, so what I was showing over here is this candle failed to trade that high. Now here fake happened. The very next candle, one single candle closed below the entire new week opening gap. After closing below the new week opening gap, the very next candle rejected from the high of the new week opening gap. Again, after closing below the new week opening gap, market retraced, rejected from the midpoint. Seek and destroy. Unfortunate that it went for that midpoint one more time, but what you will see is this midpoint rejection, again closing below the new week opening gap, it will reject from the low like this. So let me lock my new day opening gap. It's actually unlocked and that's why it's moving. After this rejection, this was supposed to be the next rejection. This was not supposed to happen, that it's going higher and taking this liquidity. It was supposed to be like this. When the day market will market will deliver properly, for example, like it's creating structures and what it calls respecting the structures, when that day will come, literally you will find your point of interest are working tick by tick like this, from the top, from the middle, and from the low. 3 stages. Premium and discount for a fair value as well. Okay, for example, if you are looking for a buy long, for for just example, you are looking for a buy loan, you have a fair value or breakaway, possible breakaway gap, I should not be saying breakaway, possible breakaway gap here, you have a fair value gap here. What you want to see is if market is like too bullish or too like it's in hurry to go to a certain direction level, what you will see is market will trade the upper portion by a little. Why that 25% is important? Because it's the upper quadrant. For example, this is a quadrant, it's not going for the midpoint, it's in hurry, it's rejecting from 25%. You will see the move will be very good, the move will create new fair value gaps when that will happen. If it trades the midpoint, rejects from there, that's even like the first one, I'm not even talking about the second one, like the one you are expecting as a bag, when it will be respecting a premium array or discount array. In this case, since we are looking forward to that buy side, we are looking for a discount array. When the first discount array, it will trade and it will start to respect or displace higher from that area, that indicates that okay, market is not even willing to fill up the imbalance, it's in hurry, it's literally it doesn't have the time to waste over here, it's in hurry to go somewhere. It's that over speeding. I don't know if you got the point or not, like whatever it is, you will see it that way. Yeah, I mean, it is what it is. And about this new day, it was because like the earlier part of the area where in 15 minutes or in 5 minutes I saw like market was trading between that area, although I don't really, yeah, maybe I'll see few more maybe tomorrow couple of sessions or something. If it's the same set of that new day, I'll remove the new day. New week is most important, I'll leave it for at least 5 weeks or so, but new day I will see this. This is not looking like a hurry to me that it's willing to go higher. By the way, I said it already, I'm not bullish. It's the breakaway gap it traded, it didn't even trade that. Now let's say it created a long weak candle and eventually it started pushing higher. I need to see it's creating new fair value gaps and it's leaving some same structure like breakaway gap, fair value gap, it's creating it that way. If that can happen, then yes. What it did is, again, it just took some recent swing highs. Now this is a high that this type of high market usually never leaves behind, but let's see if later the buy side is the target for the PM session. It's lunch hour starting in 2 minutes, do not frame any setup. Okay, I think it's also the 50 move. Yeah, it was the 1150 to 1210, that one. So literally it went for that nearest buy side liquidity and then again coming back. It was that macro. Let me, hey, T2, looking at my bag. Looking at my bag. What is it? How are you, sir? I'm good, sir. I'm looking for my sister-in-law. What? What? Sister-in-law? Where are you looking for your sister-in-law? I'm not bullish, my mama. I was just giving them some example, mama. Mama. I was giving them some example. I'm talking about these levels, mama. I'm not bullish by any mean, mama. I said how you are looking at it. This is where you already know your entry should. If you are looking for buy longs, you are messed up, because that was the first array that market should respect. Especially the midpoint. If it's an inversion, it should respect that. It should not break the midpoint at the very beginning. Because that was the only fair value that market left, or only imbalance that market left before it could reach for those levels. Okay, the sell side liquidities. This fair value, it has done its job from here, so I'm expecting it to get broken and market to reach there. This is where I'm looking for the market to reach, and from where it has literally did it that way, the Asia high or high of today, however you want to say it. But where are you looking for your sister-in-law? I give me the hints, and for whom actually, like sister-in-law in English can mean a lot in Bengali, so uh, sister-in-law is your wife's sister, can be your sister-in-law as well, so I don't really know. Or your brother's wife can be your sister-in-law as well, so English, yeah, sister-in-law can be a lot of things. Tell us. I'm bearish, mama. I'm bearish. I'm bearish for today. Like today means until this level is met. If not that 15 minutes back. And the reason is tomorrow CPI. So if market can continue for those levels by today or end of today, it will be great to see that using CPI market is going higher or expanding higher. Because this is how it looks so far. Not this one actually, this is how it looks. Okay, finally it's breaking that consolidation, or the first manipulation is happening. And that's your hourly. Or even better if you can mark like this way, the unfilled portion. I had it drawn, but later on I removed it because I have the 15 minutes on already there. So yeah, I mean, I'm not seeing any reason market not to go there. Finally. Are you here, mama? Or you stopped sending messages? Must Rider. What did I miss? I missed a lot of comments. Let me read something. Must Rider. I look at transaction price, made all-time high and created a VG in 1 minute and 5 minutes, but I didn't trade it. But in 1 minute, price created a high. If I had taken a trade, 1:2 easy I got. But after giving it in 15 minutes, it gave me 1:2 and then created 15 minutes FBG and went lower. Please explain me today's London session, like where you should enter and where I should have entered. Good. Let me remove that. Not that one, because that's the one. Once it's broken, I might utilize it for that level. Anyway, to this London 3 to 4 is what I'm looking for. Between that, whatever it has delivered, just keeping that window. Let me check how it looks on the 50. It's already hindsight data, so I really don't know what I can say regarding that one. But let's see. So this was the breakaway gap, or this was the 15 minutes bullish fair value below the Asia sell side, which is that 12 a.m. midnight, whatever the lows and any relative equal lows. So yeah, this was that fair value gap from 15 minutes chart, where this is where market traded that fair value. So this low is coming from that higher time frame fair value, where I would take the entry. This is where I would take the entry. Breakaway gap and your This is a type 2 reversal, but I would love to see another thing for a type 2 reversal. Just give me a second to figure out that part, if it's the same scenario on ES or not. So for me, this is, even though it's a type 2 reversal, but it's a low probability for me, because if I saw one has cleared the sell side, I don't know about the Dow Jones or anything. Let me see. YM, sorry, MYM. Okay, so the YM had that sell side cleared over here, like lower low, then that low. So whatever it is, this is a low probability for me. The reason behind that is the YM, we usually use it very few times. We don't use it a lot of time. We mostly use the ES and NQ to find that SMT. So SMT was with the Dow Jones, but not with ES. However, same thing again. Coming out of my higher time frame point of interest, London Silver Bullet suggesting me to look for buy longs because it has cleared the Asia sell side, and entry could have been literally from the OTZ or OTE. This is how I look into my trades, and could have been, since there was this low sitting right there, maybe below that low. But again, 6-2 level entry, simple. I'm just keeping things simple. That one is your stop loss if you are willing to put it this way, but I would love to put it the candle that created the breakaway gap below that candle slow. So I would love to put it below that one instead of that. Maybe I'm saving 2-3 pips of stop loss. However, London, just look, it's like 10 11 something like that. Barely it goes for bigger than 10 or something. 1 to 2 is the target. Better this is 1 to 2, it's already the high it is retracing from, so even it was a better target. And after taking partial, maybe you can put your stop loss to break even or something a little above your entry point, so that you can cover that one. So after taking partial, you can move it there and maybe look for the next level, because that is the new week opening gap, or at least that last fair value gap. There was this high sitting right there, so you can take until that for the partial, and then see if market can go for any higher level or not. I don't really like it doesn't make sense to talk about it when there is the hindsight data, but it's literally, that's exactly how I shared it in my stream. Sorry, in my silver bullet video, I have shared it the same way in a lot of execution videos, and that's how I suggested the entries for London silver bullet. Rakesh Kumar, 11:37. What happened? Hi, Eke, do we have a bag in 1 minute? Now I have already won 11:37. Again, let me check. You are talking about the one, this one. That is your reclaimed fair value. I don't use reclaimed fair value, or I don't know how to use it. So it didn't even reach for that reclaimed. It just reached for first fair value as a breakaway gap, second fair value as your entry fair value gap, or breakaway gap, fair value gap. It's still respecting that, but since it generated relative equal loss and I'm bearish on the market, maybe I will take the entry that way. I'm not seeing it revisited that fair value yet. So I don't know how to use the reclaimed fair value. Too many. Okay, like too many. Balance price range is also a fair value gap. New day opening gap, new week opening gap, volume imbalance, inversion fair value, breakaway gap, entry fair value or the regular fair value gap, measuring gap. Everything is a fair value gap. So the more you know, the more things you will try to use as your entry. Like you will look for any reasons to press the button. I don't need any reasons to press the button. So yeah, it's that part. Shubhranshu, why your message is retracted. What is retracted? Let me check. Why your message is showing it's retracted? Shubhranshu Gupta. Before that, 1 minute FVG reclaimed. Okay, let me check. According to today's SSN, what is SSN profile? Session, I don't know, like what do you mean by that? Maybe session as a short form. 1050 1110 macro is the most profitable entry, while London don't manipulate Asia and NI manipulates around 930 open. If London is consolidating, and if we the liquidity sweep London period to 830, we will see NI manipulation and then expansion opposite direction. This happens a lot of times around 10 a.m. Yeah, it can happen. If London is also consolidating, like Asia, like for example Asia and London, both of them are consolidating, so of course you want to see whatever the first direction is, that direction should be your manipulation direction or manipulation leg. So I was not bullish on the market, but I was still willing to see that it's manipulating higher before it could go lower. And that's why, like when market at 930 open, this was the 930, right? No, yeah, so this was the 930. So at 930 open, it came this close to the liquidity, like literally, let me remove some of them, literally here. I'm not even marking this one, like it created this, these are the levels of liquidity at 930, and then it went higher and created a bullish fair value. It's like I got my profit because it was only one fair value gap, so I used a little above the third candle's low is where I used it. The entry I took was from literally the new day opening gap high, and stop loss was, I don't remember, but something like this, maybe 20 handle or something, and targeting was that buy side liquidity, something like this was the entry. Now even though that entry I took, but what I was saying over there, like after taking this high of the day or the high of Asia session, this was Asia's high, this is after 8 p.m, this was the highest market risk, this was London's high. From after London opened, that was the highest market risk, like literally from 2 a.m to the 5 a.m window, that was the London sessions, London kill zone, and that was the high and low. Low was cleared earlier, but high was still intact. So first it took the high, gave a deeper retracement, then went higher for that Asia high. After clearing that, this is from where I started looking for my sell shorts, especially like when it broke that first fair value and created new fair value gaps. But again, whatever your reclaimed fair value or whatever you're trying to say here, yes, that scenario, it's said in ICT score content. It's not something new, it's from the oldest videos as well. Like the day you want to trade or the day you want to see market is acting beautifully is when it starts with a consolidation, which is the Asia kill zone is a pure consolidation and clear visible consolidation, not a expansion. So you'll see a consolidation on Asia. Why London is why London silver bullet is like that way. In my market maker model, I have explained like sideways price action. Why this color very deep, bro? It never stands at a place. This price action, okay, I have shared, let me show it from the chart rather than drawing this way. Back to back 2 days, the exact same scenario, I'll show you from there. This specific range, okay, you want to see that this breakout is happening fast towards the buy side to trap some buyers Then the actual manipulation, when the buy side is taken, this is where you are looking for your sell shorts, or at least waiting for the PDRS to form or bearish bullish on to get out of the market, whatever it is. I've like violated. Let me mark it this way. Come on, I need to mark it as a 15 minutes FVG and then I can change it. I'll show you the exact same scenario. I have shared it earlier, but this one, okay. This accumulation, this is the manipulation. This is not the manipulation. Why I'm showing it or saying it? Look at the same scenario over here. See that? This is not a manipulation. This is the manipulation. What is this? This is the trap. This is the smart money trap. It will first give you a break outside of the consolidation range. The exact same scenario. Then it will displace lower, because that is the real manipulation. It will reach to a higher time frame point of interest. What did I have over here? Hourly bullish fair value gap. That range. This fair value. Just go back my Friday stream and see what I said. Like I'm looking for at least to this fair value to be traded, if not the other one, the lower one. It's that fair value. On the Friday stream, I have said it, and I have shown my projected terminus how it worked. This is that smart money trap. From there, this is the manipulation to the higher time frame point of interest. When that happened, market maker buy model, the sell side of the curve has delivered already. Again, I will show you how the projection looks for this one. I know what you said, I got the point, but yeah, I mean, this is not something new. This is ICT's that's -1.5 standard and 4 standard. The first close proximate alignment above or around a level of a higher time frame point of interest. This alignment was the second one. It was better, it was perfect, but where did it happen? Below that point of interest. So I'm taking it later. If it can go through this one, then I will take it, but my first priority should be the higher time frame point of interest. It's that part. Market traded here, went here, cleared the buy side. This is where the day finished. This market maker model for the day: accumulation, manipulation, distribution. It's that distribution happened. Day finished, new day opened, again the same exact scenario on Monday. Accumulation, this is that smart money trap. Manipulation happened lower. Let me show you again where the projection is. Let me remove the previous one. About the buy side, we all know already, but just in case you don't know it, that was that buy side projection, remember? And above a buy side or above a projected terminus or below a projected terminus, market can go anywhere between 5 to 20 handle. This is the 11 handle move above that projected terminus. Okay, that smart money trap completed this projection. I will show you the new projection on the sell side first, because it's now on the sell side of the curve. So I'll show you that part. And it's the same area because high to low. Same. That trap part, you are avoiding that one. The same way I have drawn over here. Equal bodies and the high and low between the equal bodies. This is that perfect alignment where market traded, retraced back into the fair value, then continued lower, took the liquidity. Market is still going lower. I have more alignments or more levels below that, which is the higher time frame point of interest sitting right here. At this level, I had no higher time frame point of interest. So from here, okay, like this one, I have explained it, or I have showed it already. Like this could have been an entry for me as well. See that perfect alignment? Exactly 5 handle below that perfect alignment, then that retracement. How big of a retracement it was? And literally there was setup over here, buy long setup for that retracement entry. It was 84 handle worth of retracement. The setup in 1 minute was looking something like this. here. 5 minutes change in status here. Let me go for the 5 minutes chart as well, so that you guys can understand what I'm talking about. Right here, 5 minutes change in state. I will put a line, retrace back into the change in state, exactly what is overlapping with that level. This is that order block at that level. Fair value gap, traded, went for that level. You don't even need to hold until the new week opening gap high or mid to retest. Okay, you can literally take, I was looking forward to this level. Remember, I put a positioning tool. Watch that stream, you will understand that if you target, or if you're looking for a buy long, this is where you are looking, and this is how much you are targeting. It's that way. Anyway, exact 5 pips below the projected terminal, then the change in state with fair value confirmations, then the retracement exact to the change in state level, which is this level, from where it traded into your higher time frame point of interest. Especially you have a new week opening gap, you have a 1 minute fair value gap, and the 15 minutes fair value gap, and not just any level of the 15 minutes fair value. It traded at least 25% of it. It's a bigger fair value, so you are willing to see at least first quadrant is getting filled, or 1/4 of the fair value is getting filled, for better probabilities on the opposite direction on more time. Okay, it's that part. Now again, market is trading here. So far it has traded until that 3 standard deviation, but what it did is it came very close to that 4 hours fair value gap. Now I know there is a daily fair value also, there was daily fair value around this area as well. So there is a daily fair value, but since the fair value gap that is presented in every time frame, that is the area where market usually tends to go. Okay, back test, forward test it, you will find it. What I'm saying over here, any fair value gap that is presented in almost every time frame, daily, 4 hours, 1 hour, 15 minutes, everything has this area in common. And the same scenario can be said for the weekly chart as well. If market can go there, it is literally that change in state confirmed by 1, 2, 3 bullish fair value gap. So if market is coming for any of that level, it's coming for the change in state retest or revisit. It can happen as well, but I would love to see it's leaving a fair value gap for us. That's why I just used the other projection with this close proximate projection. I've moved it little higher, I guess, or maybe when I was locking it, it moved little higher, this projection, because this is where the next level is. It's still inside of the first fair value, but if it goes for any of these level, for example, I have another one over here overlapping. If it comes here, I would love to see it's coming at least how much, I don't know, like it's 836, and this level is 79. Easily market can go there, because if there is a big figure, it can go 30 to 50 handle as well, below a projected terminus or above a projected terminus. It's literally that part. So 20,800 is definitely a big figure, and from where I have projected it, it's well within that 30 to 50 handle pip range. So whatever it is, anyway, I have seen into, or I have looked into the market. I have framed everything. When it will finish the sell side of the curve, I'm more happy to see. And what I'm seeing is it has now multiple stages. I'm just waiting to see the similar scenario when it's going higher. If it goes higher, it will go higher in same way. So it will expand higher around these stages or this area. It will create fair value gaps. It will retrace back into those fair value, again go higher. Like it will create new swings or new point of interest overlapping with these consolidation rates. 1, 2, that gonna happen. Let's say how many stages it gives us before it can deliver again towards that projection, which is 21,435. Okay, that's my minimum target. If when market will go higher, I will take a partial, but I will hold the position until that far. Like rest of the position at break even, I will hold it until that far. When I will have that change in state for from the higher time frame after trading one of those area. So yeah, it is what it is. I mean, it's now congested, so let me just remove few of the levels or lines. I don't remember what was that line or level for. Anyway, oh, I was showing like how it created in 1 minute that relative equal lows over there. That buy side is taken. This is today's high so far, so I'm leaving it there. And that's the unfilled portion. It is common in 1 hour as well, so important. That's my way or highway. Came late. Can you explain your reasoning for marking the IFBG? If you are talking about this one, like this one, 1 minute on, I didn't mark it for any entry or anything. I said like if you are bullish on the market, this one should act as your IFBG. That's what I said, because from where market took the sell side liquidities, it was the only bearish fair value. That's why it was there, not for any setup frame or anything. It's because of that. When I marked it, you will understand why I marked it. Like literally you have to go back a little bit to see what I was saying during that moment. And this should act as your IFBG, because there is no other inversion fair value. It has cleared all these liquidities with that one single fair value gap over there. So it's that Mosh. Is it okay to at key no weeks at key at key? What is it? At key no weeks? I don't know. Mosh 314 and 315 candle, 314 315. So you might be talking about the London session. Let me check one more time again. 314 315. If you're talking about these two candles, what is it? Is it okay to at key? What is at key? I don't know what do you mean by at key. If you can clear that one. Bro, I didn't take that because it had no wicks. No, it had, if your stop loss level doesn't have the wick, that is what you should be worried about. Your entry, you got your entry, so what? If it breaks the reason of your entry, let the market do its job. Okay, eventually market came below that level after delivering the buy side, but eventually it came below that level. Even here as well, there was no wick over there, no wick candle finished over there. This level, I mean, it has done it later, way later. In New York AM session, the first move was literally above that level where there was no wick here, and then after the retracement it went higher again. But what I'm saying here is, when you are entering, your entry reason was the fair value and your stop loss was covering the breakaway gap candles low. Now if there is no wick on the breakaway gap candles, that is where you should be worried, like where I want to put my stop loss, there is no wick on that candle. But the way it is giving you the entry, you don't have to worry about how the candle, let's say it came here again, okay, inside of this fair value and just traded below that candle, respected the low. This is a regular fair value gap, okay. It can be fully filled. Regular means it can be fully filled. There can be other reasons as well. For example, you have consecutive order blocks here or a higher time frame order block around that area, okay. So you see here, this is 1 minute also. How come the charts are different over here? What is it? No, it's exactly the same thing. Oh, I was looking forward to this, like. So let me check on the 5 minutes. Here. This after trading the fair value gap, this was, there was a break over here, right? There was a different color candle. This was your change in state. So whatever it is, just think this way from 1 minute. When market was coming here, it traded or created no wick candle. So next time if it comes here, you are willing to, your stop loss is here, okay? You will set and go. You will not micromanage your strategy. For example, it went higher here, you are already putting your stop loss below that, and then it is going higher, creating new fair value, you are already putting here. Until your first, how you will know your strategy works? For example, you put it right below that and market came and closed you or stopped you right below that level, then went higher for that buy side. How do you know your strategy works or not? For whatever you have framed, it has the power to deliver a certain amount of profit or not. If you micromanage before at least the level you are anticipating. For example, every time I have said one word, which is the fair value gap, it is retracing from the high, it is retracing to the fair value. That high should be your first priority. It will create new fair value gaps and give you indication that it's willing to go higher or not. For example, when the high was taken, this was the highest it reached before it could reach for this fair value gap, not this high, okay, this high. When market was going higher, your first priority is this high, and you have now relative equal highs. It's even a strong draw for the market. When it was going higher, for that liquidity run, it created fair value gaps over there. Now you can say, okay, it created gaps over here. Okay, so it created gap over here. Did it stop you at the third candle? Why third candle? Only one single fair value gap. I don't ignore the information about no wick. Just think this way. This is your third candle. You got stopped out? No. What was the high it was retracing from? This high was the high it was retracing from. It created new fair value gap over here. So if it's willing to go higher, it should not take this liquidity. Okay, it took this liquidity. You got stopped out. Now what you are waiting for? If you find a new break of a structure or market structure shift, which can be happened above this high. I'm not talking about this, and there is no high over here. So this high, you got fair value gap with displacement. This is where you enter third candle slow. If there is a volume imbalance, put it below that the next candle slow. However, whatever you're doing, like your stop loss reason, your entry reason has to be the reason for your stop loss. If you're taking entry from your order block, I don't know how other traders use the order block, but the way I use it, I don't want to see the low is getting violated. Mean threshold high low, or midpoint high low, these are the three levels. Sometimes a wick can come below the mean threshold, no problem. A body, one candle's body can close below the mean threshold, very next candle can go above the mean threshold. Fake breakout or fake close below can happen, no problem. But no matter what, I don't want to see the low is getting violated. Today's 1 minute price action, change in state. Okay, after clearing the buy side, remember there was the Asia which one, Asia high was here. It cleared the buy side, traded into the unfilled portion of the fair value. One single candle, okay, one single candle closed below those whole range. It's a big displacement candle. I already know I will see fair value gaps over here on 15 seconds, but I still went to see if there is a fair value or not. Again, let me mark that up close candle first. This was that up close candle, okay, like 1 minute up close candle. This is where I have my change in state. I will mark the CISD so that you can understand this CISD. 15 seconds chart. Confirm. How can I confirm? This was a 1 minute change in state. So I went for a 15-second chart. When market was closing below 1 minute, okay, you need at least 15 seconds. So it will take 4 candles to confirm a 1 minute candle. Let's see what is the time over there. This is where the order block high formed. Okay, I will actually let me show it from this chart so that I can give you the thing side by side. This was the order block range, okay, this. So that candle was 095745. What do I mean by that is 9 a.m. 57 minutes and 45 seconds is when this candle started. So by the time the candle closed, I will mark it from here. See that closer? Look where the closer is. So that candle's closing is also included inside of this one. Now look for 4 candles. 1, 2, 3, 4. This is where you have the next down close candle closing. So the change in state, by the time it happened, market reached until this far. I will put another line over here. By this candle's closing, you need fair value gaps like this one. Do you have fair value gaps? A small one over here, another one over here, another one over here. The first one, what you are expecting? A breakaway gap. You can expect it to remain a breakaway gap because you have other fair value gaps and other reasons market not to go there. Let's start from the change in state. What is the like how change in state delivers most of the time, or how it delivers almost every time? Change in state will happen, the very next candle will retest that opening price or change in state level. Sometimes it will retest the order block low instead of the body, like the candle's wick instead of the body. It's that retest happening in 1 minute. Okay, very next candle retested. 15 seconds confirm, 15 seconds fair value gap, remained as a breakaway gap. Entry can be literally from here. Okay, you don't have to take entry from the lower one at the level of change in state. I will give you 100 examples. Just give me some time. Whatever you are targeting, but I target either nearest liquidity or 1 to 2. It's that part. But are you getting the point? I'll show you from 15 minutes chart. First 15 minutes chart. Okay, it traded that fair value gap. Even look here. Okay, just start from here. This was the hourly bullish fair value gap where market traded to liquidity from here and these levels as well, like from this low as well, inside of that hourly fair value. When it closed above the highest up close body close candle, highest lowest down close body close candle, this is where you had your change in state. How you can confirm it? If you have a 5 minutes bullish fair value gap forming, because it's a 15 minutes, so very next candle, this is 15 minutes, so very next lower time frame here. Do you have bullish fair value gaps from 5 minutes? One here, one here. By the time it closed above that level, here. So this candle's closing, by it closed over there, you have one fair value, two fair value, change in state. I'm not even talking about this retracement. Just look at the very next candle tap on the same time frame. Okay, 15 minutes, same time frame. The one I showed earlier, it was 1 minute, so I showed you the very next candle on 1 minute revisit. This is where your entry is. A stop loss, we don't take it on 5 minutes, so just consider this as your a smaller time frame entry or something. It can be covering the mean threshold or the low of the candle like this. Now 51 handle. Okay, let's target 1 to 2. If it delivered or not, that will be the problem. If it doesn't deliver, then that will be the problem. You can put it on mean threshold as well. Did it deliver? So far I'm not seeing it that way, but I hope you know where to put your stop loss. It's a long wick candle. We are not putting all the way back there. Order block maybe a little below mean threshold. I have a hourly fair value gap as well. I have 15 minutes bullish fair value. So many reasons not to put that low, but again, think this way, like whatever it has delivered on, even on that day, just until that far. This is 75 handle, so you are getting more than that. I usually look for 1 to 2. How you can utilize this range from 5 minutes chart, since it's a 15 minutes candle or 15 minutes change in state. Let me show you from the 5 minutes chart. Let me remove that entry because we usually frame the entry from lower time frame, 1 minute or 15 what it calls 15 seconds, something like that. If this was your entry, you had to cover the breakaway gap, because you have a fair value here, you have another fair value over there, but where I'm talking about the entry at the change in state level, so you have to cover at least the breakaway gap. This is how you are refining or redefining your stop loss placement, and I believe this way you will get your 1 to 2 for sure, because I don't know, let me check how many. 50 again. Oh, I'm putting it at the low of that one. Yeah, the same 15 minutes low, that's why. Consecutive order blocks, let's see where the mean threshold aligns, which is maybe the week of course, so maybe here. Now let's see, like it will give me now because it is way smaller, and I know for a fact that it will give with proper stop loss or something. This is literally 1 to 2 is happening here, so it has traded until that level already, and before it could come lower. Yeah, it took more time, but you're looking at a 15 minutes and 5 minutes. That's what it's doing over there. Okay, it has even delivered bit more than that. If you're not happy with your stop loss there, maybe still if you lower it a little, you will still get your 1 to 2 around this level, because that is where market traded already, I know. So that one. Okay, but anyway, same scenario I'll show you again. Like this was from 11th November. Let's see how 12th November did. See that retest, or even the very next candle. I was showing it. No, this was the previous one. This is the new one, which is today. There was no fair value gap forming below that. There is a fair value above that. Now I have to confirm that that fair value above is happening when the change in state got confirmed. Is it happening that during that? No. So I'm not happy to, or I'm not willing to take any entry based on that change in state. And you saw like how market, if it respects that fair that order block that much or not. Later on, like when market is revisiting that order block level again, is it respecting it properly or not? Because it's already coming for that low of the order block. So let's see. If no fair value, I don't take or frame entries from that one, because it's a low probability change in state for me. But again, the revisit or retest of that order block or change in state level is like this. It looks something like this. From 5 minutes chart. Now if you can find the 5 minutes change in state, you can go for 1 minute setups as well. So by the time you are getting your 5 minutes change in state, you need to look for the fair value gaps in 1 minute. By the way, this is the area you better avoid, because this is below a 15 minutes bullish fair value, and 5 minutes you have to see a higher time frame PDRF. 15 minutes can be that higher time frame. So instead of framing it here, I know if I frame it here I'm still safe, but I'm not giving you false information, since how I put my chart this way. Okay, so this is like 15 minutes, this is my 5 minutes, and then I look into the setups or entries from 1 minute. So since it closed below a bullish PDRA, and so far I haven't got any, like when this candle was closing, which is here on this leg, I haven't got a higher time frame change in state. After market confirmed that it was a fake on, this was the next area where I could look for it. Why? Because one candle closed below, very next candle closed above. This is the leg that revisited or retested the bullish fair value, then started going higher again, or showed the intention to go higher again. That is your 5 minutes. For 5 minutes chart, that is your higher time frame point of interest. So this was the lowest down close candle that's trading into the higher time frame point of interest and getting what, like engulfed or violated. This is where you are looking for your change in state. It's looked like this, something like this. It was that level, it was that retest. You had fair value gaps when market was closing around this area, like literally when this where is it, here, when this candle was closing, come on, here, okay, that closing was happening, you had a fair value gap already on the leg. How far market came? Literally at least at that change in state level. So entry doesn't need to be from the top of the fair value. Most of the time like so far, whatever I have used or whatever I have done so far, that is the case. One single fair value, no other fair value. By the way, break of a structure as well. So third candle slow is where I'm putting the stop loss. At the same time, I believe that is covering my mean threshold of the order block as well. If you want, you can put at the order block low if it's not too big of a stop loss. For example, it is only 11.5 handle, so you can put it maybe there as a 13.75 handle worth of a stop loss. Again, 1 to 2 is what you are targeting, or if there is any relative equal highs or liquidity levels that you can see over there. So far, there is literally nothing that can send the price lower. So for me, at least I try to take partial at 1 to 2, and then if after like putting the stop loss to break even, I will hold until at least the new day opening gap low, because this is a higher time frame point of interest, or this is the second most powerful fair value gap ICT have introduced to us. After new week opening gap, the new day opening gap is the second most powerful. So maybe that low can be the level after taking a partial at 1 to 2, moving the stop loss to break even. Now there is a possibility if I trailed it too far, this low could have stopped me at that break even or a little profit trailed stop loss. I'm not sure, but since it's hindsight data, I'm telling you that beforehand. It's that part. I mean, you have to frame it from a valid area. Only that is the criteria for change in state. When market is below a higher time frame point of interest, you are not framing a bullish change in state, of course. When it broke through a higher time frame point of interest, how can you frame a bullish change in state of delivery? Because it was supposed to respect it and give you the change in state. Did you receive any change in state here? Like literally here? This candle? No. So no change in state. Waiting, okay, it broke that. So what is your next thought process, or what you are going to do next? You're willing to see if market can go for the next high time frame point of interest level or not. If it can reach there and give you the change in state, that is when you are framing. Now 15 minutes, I can clearly see how the fake breakout happened over here, or fake closer below that fair value happened. So waited again. What market did? Went, forget the 15 minutes chart, you have the 15 minutes fair value, closed below, you are not below the fair value gap, you are not framing change in state. Waited, what market did? Went higher, closed above, created the down close candle inside of that fair value, then it gave you the change in state. Now you look for the structure, how it looks, and then you frame your setup, because it's now above the higher time frame point of interest. And from where you are getting that reaction, there is literally nothing at this level. At least there was a fair value above, so you can maybe look for that fair value, or there was a very small fair value above, but from where this candle was coming lower, there was no higher time frame point of interest over there. So if that makes any sense to you guys, okay, it's that part. Understood, thank you. As we are take trade, no, I'm not taking trade today, bro. It has shown me enough to avoid the session, and it's now lunch hour. There is no trade valid during lunch hour. So yeah, I mean, it is what it is. Just you need to know when and where you are doing it. It's not even like think, okay, like 5 minutes chart, what can be your higher time frame higher than 5 minutes? 15 minutes. So when the 15 minutes PDR is broken, are you looking for a bullish setup below that fair value gap, or you are looking for a bullish setup at the fair value or above the fair value gap? It's that part. Okay, so when market was closing below and then giving you, still I can see like it never came back below that level after giving you the change in state, but I'm saying it because that's like, this is not the way to frame it. This is the way to frame it, at the level or above the level, because it's retesting the level and then giving you the change in state. It's that part. So anyway, if it makes any sense or not. And as I was saying, like this one's job done with that liquidity, those liquidity. Why that one's job was until that liquidity? Just I said it few minutes ago. The high it is retracing from to the fair value, that high should be your target. It was that high. Fake breakout, close above, retest, continuation above this high and above this high. That's that part. So this fair value job is done. Same with that change in state of delivery when that happened. When that one is done, this candle has nothing to do. It's not my order block. It has literally nothing to do. The order block, it has to be traded like anyway. I will talk about it later. Like not today. You guys observe the change in state, the order block when the delivery has sent price above a buy side or sell side, above a buy side or below a sell side. When that happens, mark that order block, observe it. It's your homework. I don't want to feed you every food that I cook. Okay, I will cook the food, but you have to learn how to eat it by yourself. It's that case. When you will have questions, ask me. I will be more than happy to answer it. This fair value, I'm not keeping it over there. This one again, fake can happen only once. Fake finished one more time, close below. Literally, I don't care about if it's a gamble. I don't care about what setup I could have over there. This is the entry for me. Like literally, this candle's week was the entry for me. Already a fake happened over here, and my anticipation is until this far. So when market is going towards my direction, I don't need a setup. I'm sorry to say it this way, but I don't need a setup. When I know how to work with the market, I will work with the market. It's that part. And by the way, if by any mean I took that setup, my stop loss will not even go a tick above that level. Like literally, this will be where I will be happy to get stopped out. So this is 5 minutes chart, even better. I'm seeing two fair value gaps over there. Just look here, guys, look here. Again, I'm not, see that close below, okay? Like this already happened over here. So after that close below, which already happened before as well. So fake can happen only once. It's the second time it did that fake breakout. When this change in state happened, just look, like I don't need a big candle to mark a change in state. Let me put it aside. When this one happened, the very next candle trade back inside the range. I don't know how it looks on the 1 minute, so let me bring back the 5 minutes there and see in 1 minute if I have any fair value to confirm that or not. So far there is no fair value gap, so I'm not happy with that change in state. Waiting to see what again market to close below this level or give me new break of a structure, a structural shift, whatever it is. That shift happened below that low, like literally here, and trade back into that fair value, overlapping with, there is a small volume imbalance and fair value gap right around this level. I can mark the volume imbalance as well. There is a small one like this, okay, but when there is a volume imbalance, you can literally mark like this way. So easy. This it's not sell side. I just marked it to remember what I'm looking for, or where is the fair value starting. Usually the box, I don't make it visible on my 1 minute chart or 5 minute chart. It's only visible on my 15 minutes, but I changed it during the stream when I was explaining why I'm expecting it to reach there, or that sort of thing. So usually it doesn't appear on 1 minute or 5 minutes. So that's why I mark it as my sell side, so that I can keep an eye like where the sell side is that I'm looking for. It's that way. Price getting interesting here. Yeah, it's getting interesting actually. It is interesting every day, every time, bro. As long as It's going towards the direction. For example, like after today I'm bullish again, like literally from tomorrow's CPI I'm again back to bullish. Okay, because I believe today is the day market will trade for this, like trade inside of this fair value. So from tomorrow I'll be again looking for that new all-time high to form. Let's see like how far it is continuing. It's my expectation. Doesn't mean after getting up from bed I will see market is already trading that and reversing something like that. It can continue lower as well. Who knows? But why I'm saying it this way is because this is that weekly change in state. Okay, so this weekly change in state, it can be consecutive as well, so it can be maybe coming for this level which is overlapping with that lowest down close body close candle, like this one. So it's overlapping within that, so this body can be a part of the reason for market to go higher as well. Even the wicks can be the reason. It's literally this is the range I'm looking forward to see. Anywhere this place market better if it leaves a fair value gap and later comebacks, but whatever it is, let it be this way and then continue. Whatever the market does, I'm more than happy. After trading here, if I get any buy long, I will be happy to take that buy long. Even better, this level 21,050, around that level. Okay, it's that part. That's why I have sell side marked over there, but it's more likely like this. The other sell side is just that 4 hours fair value gap high, the other one. Okay, I just changed the visibility, that's why. One is taken, this was a sell side, like literally that was my sell side, but the other one is not a sell side, it's more like that 4 hours fair value gap. And see the 15 minutes structure, look here. Okay, I'll go to the 1 hour chart. Why I'm saying it this way, 4 hours already I'm showing you, 1 hours here. See that this is the 1 hour fair value, there is a very small fair value over there as well. Within this range you have the 15 minutes fair value as well, like this one. Let me make it visible in 1 hour chart so that you can see 1 hour and 4 hour. See that? Let me make another one for the hourly. This is the area where the fair value gap is presented in every time frame. So that is the area where I'm like, no matter what, even I can literally maybe pre-place a buy long entry. I don't want to do that because that is a pure gamble, but this is the area where market should at least reach. It's that part, the fair value gap that is presented in almost every time frame. That is the actual fair value gap. For example, when market was around this area, see 15 minutes doesn't have a fair value, but it was crazy bullish like this or bullish like this, but it's going higher without any single fair value. It doesn't make any sense. That's the moment I looked into the hourly fair value gap. It's that hourly, but look here, there is nothing. So eventually when market is, remember this fair value I have already like removed already, I didn't save it, so whenever I change my chart layout it will appear the previous save option. But this one I had extended until this far, but I removed it. Why? Because this one's job is done, man. When it traded here, it took the high it was retracing from. Its job is done. Next time market is coming here, it should not respect that. The same way it should not respect this one. The same way, if it continues lower like this, or if it trades here, goes higher above that high, then again comes back for this level, there is nothing to do with this fair value. Yes, you can utilize that fair value to frame your sell shorts as inverting those fair values, or literally this was bullish fair value where market found support previously, it will find resistance now. Just that part. Anyway, it's a confusing thing. If I say so many things in a single stream, it will be confusing to you guys. So just look for the fair value gaps that is presented in almost every time frame, or At least your 15 minutes fair value gap should be your first priority if you're trading in 1 minute fair value 1 minute chart. If nothing is visible, for example, market is from 15 minutes chart, it is going higher like this. Okay, like only one fair value formed over here. Let me remove this one and maybe move it a little towards the right side. See, only one fair value. After that, nothing, 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 nothing until this one fair value. Only this one. So when market was going higher like this crazy, like the direction was one-sided and it was not giving you any fair value gaps, that is when you are looking into your hourly chart or even 4 hour chart. I don't know, like whatever the time frame suits. First focus on the hourly, then maybe if you still cannot see anything from hourly, then go for the 4 hours. But hopefully by hourly chart you will get it, and it was that hourly chart where I marked this fair value gap for that day stream. I was saying like at least market should retrace back here before again continuing higher. It go back and check my I think this was on Friday, 8 November was Friday. Just check my Friday stream, what fair value I marked and where I said market will retrace before it could go higher before I finished the stream or during the stream as well. It was that fair value. Now look here, no fair value gap presented. So hourly one sent it higher above this high. This fair value's job is done. When market is going lower, it literally this is how it looking, and this is the low that is going from a no man's land. There is nothing over here. Okay, like even if you think okay 15 minutes body or hourly body respected that fair value, I'm not seeing it that way. I'm seeing it came this close to a higher time frame point of interest where I had a 4 hours fair value gap. Higher time frame should be the priority no matter what. For example, when market was after taking today first London sessions high or the buy side liquidity first, which is this buy side liquidity inside of your new week opening gap, this leg when it was falling, it came this close to trade the high of the new week opening gap. It didn't trade it. At the same time, I had more liquidities above. So when market was retracing, I was not framing a sell short from here. Remember, I was already in a buy long position from that fair value using that. I was saying it should, no matter what, like literally I'm saying like it should clear this one. I would say it, or I would take this entry on my funded account only if it didn't do something like this on the bottom side. Only if it could continue from here, or only if it could first take the sell side then give me this delivery. That's why I didn't risk it on my funded account. Other than that, literally I showed you, like I said everything during the stream, right? So I don't have to repeat the same thing over and over again. But remember, it has reason, it has a specific levels. After clearing the liquidity, it fake, okay, from 1 minute. We know we want to see it from 15 minutes chart or higher time frame, how that one is showing over there, because it's a new week opening gap. It's a very higher time frame or high probability gap that you are looking at. Look at that 15 minutes rejections, rejected from the top of that body, closed above. Okay, it's not close at, close above, came closed below, went for that midpoint, closed below, went for that low, then continued the same scenario in 1 minute. Fake breakout, one candle, the very next candle, one single candle closed below, upper rejection, again came below, closed below, mid rejection, seek and destroy profile, again market went for that mid rejection. When it will not be a seek and destroy, this will be the next case, tick by tick low. Then every move has, every PDRA will have this type of reaction when market will be working properly, or market will not be something like this weeks for 20 hours in a row. Okay, like literally the whole day. The only fair value you had was this one, the whole bloody day. This nothing below, nothing above. So anyway, live stream is lag today? Maybe like at this moment I'm not getting a enough upload speed, and for last couple of days it's happening also. Tomorrow I'll try, like if I can remember, I'll try to turn off the turn off the router for a couple of minutes before I can turn it back on and start the streaming, so that it can reset the cache memory or something. I'll like literally reset the cache memory and stuff, so that maybe it can work better. I believe it's the reason because I haven't turned it off in maybe 2 years for once. Unless like the power cut happened couple of weeks ago, remember? Like on Friday there was suddenly a power cut around the area. So that was the only time I think it turned off. So yeah, I'll reset it. I'll see how the DNS server settings are doing over there on the router. Let's see how that works. And for now I'll actually finish, like it's lunch hour, it's already too late, and I have work as well. I'm not gonna take any trade or entry today on any of my account or accounts. So tomorrow I'll be back again, and hopefully tomorrow I'll try to come before CPI if possible, but if not, see you at New York AM session before 9:30, maybe 9:15, around that time. And let's see what CPI has to offer. After CPI, yeah, I am hoping market will have very clear, visible direction for us. And this is that preparation for the CPI. The way I was expecting dealing range to form, market didn't deliver that way. So literally, I'm not looking for any retracement entry. Like 5 minutes chart, okay? Dealing range type 2. 15 minutes, I can show it from there as well, but just this. Low, high, higher, higher, low, higher, high, higher, low, higher, high, higher, low, higher, high, higher, low, higher, high, then whatever it is. When market is coming lower, it has to first clear the sell side, then retrace back into a PDLA, then go lower. But there is literally no PDLA there. It formed nothing in any time frame. I have went through all the time frames to see if it has created any PDLS to retest and then continue lower or not. So literally there is nothing. Yeah, I know there are some fair value gaps forming here and there, but higher time frame or clear structures, the only clear leg is this leg. Other than that, there is no clear leg. For example, this fair value, where could be your stop loss? Like literally tell me where could be your stop loss. Maybe this high, because there is a third candle high. You are not putting it here, of course, if you are using this fair value, or this as your entry point. So stopped you out, came lower, bullish fair value created, inverted that fair value, or at least broke that fair value, never retested that, or created bearish fair value gap here, bearish fair value gap here, never revisited that. So I'm not seeing any reason for looking for setups, at least from my higher time frames. Lower time frame, earlier it didn't work better, or at least I didn't see anything over there except for that accumulation, like manipulative moves over there here and there, because of I think the FMC member is speaking. However, even this one was that 11:50 macro, and after that it was lunch hour. So whatever the move happened, it happened during the lunch hour. Still not convinced. Okay, still not convinced with this, at least here, before it can go higher. Yeah, retracement can happen to a fair value gap, then again come lower, but whatever it is, my buy long setup will start, like I will start to look for buy longs from here, not here as well, even though it's trading into a 4 hours fair value. Anyway, the food is literally look for the fair value gaps that are available or overlapping in other time frames as well. For example, you marked a 15 minutes fair value. If that same range you have a, like within that 15 minutes fair value area, you have a 5 minutes fair value gap, mark that one and look for 1 minute if there is any fair value gap over there or not, and look, even if it's sitting on the lower portion, even if it's sitting below the midpoint, still market will go there. Or look how it worked when market came for the higher time frame fair value gap. If there are multiple like lower time frame fair value gaps inside that higher time frame fair value, how far it reached inside that higher time frame fair value gap, exactly how far, and then maybe deliver the way you are expecting it to deliver. So it's that food, you will understand. And there are few other things I will come step by step, like literally there will be too many things I'm sharing, but I don't have time to actually make. For example, I'm planning to make a CISD video for maybe last 2-3 months, and I still couldn't. It's been in my mind for more than 7 months now. Like after uploading the market maker series, it's been in my mind since then, but sorry, too busy. I have shown you guys every day. I have given you the exact same information every day, that how you are marking it and when you are marking it. But yeah, I mean, if it's hard for you guys to take the notes, then I think it will be hard for you to take the profit as well when you will be trading. It's that part. There is no alternative. Yeah, so I'll finish actually. It's too late and I have to sleep. I'm super tired from yesterday's exhausting day, and it's already like, not task manager, of course, it's already like this. Okay, 5:11 a.m. in Australia. By the way, I believe Outlander, I don't know if he's still here or not, but Outlander, he has some experience, of course. He's been trading or doing this for a long time. He's experienced enough. He actually got that idea of changing state of delivery very quick. Like literally, I didn't see anyone else got this simple information that quick. He came and sent me a private message that thanks for that, by the way, because that was the missing part, and now I can see the price better. Anyway, that's, I think he sent it in my personal message, so I shouldn't be sharing, but the reason I'm sharing is person who knows or who practiced it, that is the person who will get the benefit out of it. It's that if you hear something or see something today and start to trade from tomorrow, it's not gonna work for you. That simple. It's not going to work for you. It's that simple, my friend. It's that simple. Everything has a reason, and the reason is literally this. Going for 21170. 1170. Should not, because if it's going for their Rakesh Kumar brother, then who is going to send it lower? That's the thing. If you're thinking about the 1 minute fair value, I don't know, like after breaking multiple 5 minutes fair value and reversing or going that far from a 4 hours fair value, I'm not seeing anything or any reason for market to fall from there after taking that 1 on 70.75 or whatever the level is. No reason. And if you're talking about this fair value gap, again, the job is done. So if it goes there, it will continue for that buy side, at least for the new day or new week, something like that. It should not. I would rather see it's going for somewhat around this area if it's willing to go lower one more time. One of those fair value gaps below that liquidity. I got your point why you asked, why you said it, because that equal highs or relative equal highs, but the problem is there is nothing above that high that can send price lower. You see this 15 minutes fair value gap. It should not break this if it's willing to stay below that level and trade back into this 15 minutes. Like, this is a 4 hours fair value. Let me remove it. From where it is reversing? Where it is reversing? Is it a area to reverse? No. Then why it should go there? What is there that can send price lower? If it goes there, it's going from a 4 hours fair value gap. So the retracement to the 4 hours fair value, the high was this one. And it's time for market to create the all-time high. It should not go there and then stop the market around this area or start to go lower again. If it has to come lower for this fair value gap, it has to do it within this, because above that there is no fair value gap. And if you are talking about that fair value from the 5 minutes chart, see that fake breakout once, then the trade, the fair value and continuation towards the sell side. Let me show the exact same scenario one more time. Fake breakout once, traded back into it, went higher, took the buy side. So if it comes again, what did I said? It will not respect this. It's that part. So if it goes again to that area to take this liquidity, it should not respect it. It should continue higher, and above this area there is literally nothing from any time frame that can send price lower except for that new day opening gap or the new week opening gap. So it should not go until that far. It's that what I'm seeing at the moment. More likely I'm looking at maybe this is a fair value, already it's trading and it has already traded from this swing high to this swing low, the midpoint, above the midpoint. The better scenario can be one of those fair value gaps if it can, but not more than that. Because if it goes there, there is nothing that should stop the price except new day and new week. So it will go for that level as well, that 211 or even 227, that level. So I mean, up to you. I mean, if you framed your setup for that level, please do not get confluenced or influenced by my words. It's because that should be that's the logic. Okay, it's the logic. I'm seeing it that way. 15 minutes fair value gap. This is that fair value gap. It's only one fair value, so it can fill it up completely, no problem. But if it's willing to revisit this 15 minutes fair value, it should not break this fair value gap. Now a lot of fake like this happened. That fake can send it for the order block level or whatever this down close candle is. It can be propulsion block, but whatever it is, it can send until that far. Like a fair value, it can go above that fair value gap by a tick or two and then again continue lower as a fake breakout like this, as a fake breakout like this. But yeah, it is what it is. If it goes there, it should go for the new day, new week. I saw your, like, the reason I saw, definitely, and again I'm saying it over and over again, that if you are, this is the 4 hours fair value gap level, so if you are framing any buy long setup, just like take it based on your analysis or based on your setup. Please do not listen to my words. But yeah, like if I'm aiming for that level, maybe I would hold until at least this level, if not higher, at least this level. I'll take a partial, but I will hold. I will not take partial here. I will take partial at that last fair value gap. not right above those highs at that last fair value, like literally from 1 minute at this level is where I will take a partial, and I will hold the rest until that far and put the stop loss at break even from wherever the entry was. Let me see on more time. Inside of that fair value, it has already broke this one. It was at equilibrium level, or mostly it was below the discounted end, but this is the one inside of the higher like what it calls, inside of the OTZ and the premium discount area. So any of this is broken, that is the indication market is willing to go even further. One of those. This is the fair value for me to take a entry or look for a entry, and this is the breakaway gap for me, so I will use it that way from the 5 minutes chart. Okay, so not from 1 minute or anything, from 5 minutes. Bullish breaker on 1 minute, bullish breaker, what, this one, or you're looking at this one? If you're looking at this one now, I saw recently ICT is marking something like this, where it has different highs or different like different lows over there. It's not like low high lower low, then the like liquidity graph market structure shift that way. But if you're looking at these ones, not really. I mean, how come it's not? Is it a swing high over there? That's the question. Actually, it's a swing high, but it has to zoomed in by a lot. It's more likely no, actually I don't want to mark that one as a bullish breaker. That can be the like breaker is literally the failed order block, and it was trading inside of a fair value gap. It was the propulsion block that had the force to send price lower. But if market respects this one, uh, I'm not seeing it's respecting that. I'm more willing to see market is coming for these fair value gaps that it inverted or respected. By the way, I'm not bullish at all, so that's the first case of scenario. And no, as I said earlier, like no, it's not my breaker. I would look for this area, and that is the delivery happening. If it can give me a change in state from here and create 5 minutes 1 minute bearish fair value within next couple of candles, I'm more than happy to take a sell short again for that low. I saw that bullish fair value over there. Don't worry about it. I would rather use it as an inversion. If market can break that, all I need is a 1 minute fair value forming within next how many? This candle and next candle, a bearish fair value to give me high probability, and not just fair value gap forming. By the time the fair value is forming, market has to stay below this level. It's important, okay? See this, it's failing, or it's not showing the willingness to stay below that level. Just observe this type of price action every time market is giving you a rejection or reversal, every time. Okay, even whenever this was happening or this was happening, every time it will come below this, it will show you the reaction or reversion, what it calls, like reaction or rejection, that it's not willing to close above. See this candle or even this candle, it was showing